What the fuck? Bitcoin, what the fuck? What the fucking fuck? Where did that cycle go? That was a little... You cannot unsee certain things in life. And unfortunately, for a lot of traders out there, they have to face the fact that that's pretty much them inside. When they're not part of the platoon, or they're counter trading us, waiting for Bitcoin to make a move can be a frustrating experience when the charts just go flat for days on end. In our case, a day and a half is all it took, but it felt like it was a whole week or something, you know? We had a short trade set up a day and a half ago, maybe 2 days ago. A day and some change, who's counting? But yeah, it can be infuriating. It can make you lose your nuts. I always emphasize on one point and one point only, which is patience is your friend, not trend. You can survive anything if you have the patience, self-control, and groundedness to allow yourself to not be like what we just witnessed. That guy. You don't want to be that guy. So in today's video, we're going to talk about what it takes to master this sort of stable ground where you don't lose your nuts for no reason. I mean, there's a good reason to go crazy. Bitcoin, what do they say about markets? They can remain... You know the rest. Rationale, throw it out the window. But congratulations to all those who participated and took the trade. Put their little faith, which is big for me. Big faith. And this guy's setup. I would say that we're not out of the woods. I have some good news and some bad news. I did some chart analysis today, and I'm going to show you what I came up with. And I think we're still moving according to our plans. Look at these guys. Plus two. Who are they to plan the market? The market plans you, bro. Yeah, I know. But we have a couple of tricks up our sleeves that allow us to boast certain things out loud in public. Such as, eat it! To all the haters and non-believers. Go follow your favorite guru while we work on our next profitable trade. That was a little unexpected, right? I hope YouTube doesn't ban us for doing what we do. I mean, I had my shorts on, and I think I had to take a few videos of that, few takes. But actually, see this? I'll tell you a little secret. Everything that you see here is programmed live. There's nothing pre-recorded. Okay? If that's not impressive, I don't know what is. Ladies and gentlemen, this is no other stream can come close. Go tell your mom, your friends, they're welcome. You're welcome. We've been giving out these free signals day after day, these setups that you could follow and make money. Nothing platoon exclusive at this point. Don't get used to it. I'm not seeing subscribers. I'm not seeing likes. We're gonna slowly trickle our way into a different direction soon. And the fun has to stop at some point. But before we jump into the charts, I would like to give a shout out to El Morte there. First of all, TGIF. You're right. Absolutely right. Second of all, the pit, the battle arena where the magic happens. It's a 16 million by 9,000 resolution screen cinema experience here at Cryptopocalypse Now that you need an OLED for. There's just no other way around it. You're absolutely right. Whatever you're thinking right now in terms of I need to get a G9, Samsung Odyssey G9 to wrap my head to match the pit, you're on the right track, my friend. It's exactly what each and every one of us needs to do. And for that, we need to be diligent, make some money, and get a whole bunch of G9s. Hell, maybe let's do a giveaway. What do you guys say? Let's do a giveaway one of these days. Freaking Samsung Odyssey G9. 5K resolution. 49-inch wrapped around your dome. Whew. Trading just got easier. It has nothing to do with an indicator. Now you have peripheral vision. Now you see market history. Now you're looking into the future, drawing lines like I do, little squiggly lines all over the place that actually materialize. That's the secret there. To the rest of you guys, welcome, and glad to have you here as usual. I'm your host, Crypto Ranger. Welcome to yet another stream for Cryptopocalypse Now. Don't comment on my undies, my panties, or anything like that. That is not the focus here. But I appreciate the compliment. And they can eat it for sure. Strong coffee indeed. NYC Beast. Always here. Love it. Oh, he already has a G9. Well, but do you have G9 Neo? Do you? G9 Neo. That's dropping in August. Exactly. Got it 2 months ago. I'm sorry to hear that at this point, because a month ago they announced G9 Neo, which is a ripoff. It's like GTX, RTX, all these cards to process your high-def MarketSpy charts. You got a 3090? Flexing. They got a 40 series coming out. 40! Like half of us in here are in our 40s already. You know, every year we've been upgrading. I'm surprised we haven't turned into like human cyborgs at this point. Every year, a new phone, new monitor, new hardware. And the same old shit on the charts. Nothing's ever changes on the charts. And for that reason, I think we have identified our next setup, ladies and gentlemen. MarketSpy is refusing to cooperate. Tonto, can you please take care of it?
As you wish, CR. I'm on it.
Thank you. You're so responsive. I wish exchanges were like that. You know, when you want to put an order through, everything, you know, nothing disconnects, nothing, WebSockets and whatnot, API systems.
Sorry to hear that, CR.
No, it's not your fault. It's Bybit. Before that, BitMEXC, you know.
Careful, CR. The YouTube algorithm does not appreciate when you compare Bybit to BitMEXC. You may not get as many likes and views as a result.
Tonto, you need to mind your own business. Mind your own business. You know what I mean? Let's fix this, Tonto. Get on it. No reply. I think he's busy. He's on it right now. He's on it. Ladies and gentlemen, he is on it like McDonald. That didn't even rhyme, but you know, we'll keep it. We'll keep it. And what do you know? I think it's working. Welcome to the pit, ladies and gentlemen. The place to be. There's nothing else quite like the pit. 16 million by 9,000 screen res. In your face. Maximize it on your little 4K monitors. And feel good, baby. Feel good. Now, first of all, guys, when we were at exactly 38,373, I went to the platoon immediately. You don't hear from me when there's nothing to say, but when the time is right, I went to the platoon and said, take profit, platoon, right now. Right now. That was a high alert ping. You should have notifications on for CR, market insights, as well as the platoon chat, because that's where the magic happens. Now, if you did that, you're good. We had a couple of trades here. First of all, I was taking profit in the range yesterday. And by the way, if you took the trade, make sure you copy this to the clip. Yeah, you have to take profit. We're going to talk about why this is important and what's setting up next on the chart. Whether this was a dip to buy or there's more downside to it. Allow me to just go and go over here real quick and scroll over to profit wall. You guys are killing it. There's so many entries. No, I'm level 7. I'm level 7. And this was yesterday when, because you have a short setup and you keep adding to it, keep taking profit, and there's two of them back to back. Overall, looking great. So here's the big picture, right? It's not really that big because we have the screen split in two. But we had a nice consolidation here on the last night I started accumulating here. I added a little bit on this rejection here. Spent 2 candles underwater. This is a 4-hour time frame, so we were 1, 2, 3, 4, 5, 6, 7, 8, 9, and this crazy candle that we witnessed live. 10, 40 hours later. This is almost 2 days, right? 40 hours later, we have ourselves a nice little trade. Now, we always talk about capturing at least 1 candle, and I'm always referring to like these sized candles, like this red one over here, this white over here, this white over here, this white over here, this red over here. But when you get something like this, right, it's an automatic in your mind. It's a profit. If you're still convinced that things are going down, I think it's better to take profit and then reassess and give yourself a fresh start. And if you want to continue holding it, you can add to it
If it's going down, who cares? Your stop loss is now affected, because if you were trading this with a stop, we weren't trading this with a stop. We had a plan to one exit and take on, what was the profit? Take profit in last night's stream 2 days ago. It was the 1 hour ATR value, right? And we didn't quite hit it on this candle. We almost had it, and it was shy by $200 or so. Supposed to go just a notch lower. But that ATR value came back and gave us this trade today. And if you took profit, right here near the bottom, great, because 700 points later, which is a trade in itself, you're thinking, oh, man, what if it's now it's starting to mess with your head, because it could be a bounce. Is it a bounce? Let's take a look. I think it's a bounce. I just did not have the chance after we closed the trade to actually go at it and take profit on this thing over here. So 4-hour chart, not that impressive. But let me do it like your favorite traders do it on YouTube. Let me switch over to a 15-minute time frame. Okay? And let me zoom this in and say, look how badass of a trader we are. Look at this. Look at that trade we just had. $2 million trade. Look at that. Look how MarketSpy predicted the drop. Look at that. Let me turn on my Armageddon. Look at that. Failed momentum, my friends. And then we go down. All the way down from here. Yellow X. Yellow X. Yellow X marks the spot. Yellow X. Yellow X. Red dot. Red dot. Red dot, everybody. And look at that. Look at that trade you could have had with MarketSpy. Look at that. Imagine the Lamborghinis, the millions you could have made. I'm just trying to entertain you guys a little bit. Don't freak out. I'm okay. But my point is, it's not that big of a deal. If you look on lower time frames, you can exaggerate things a little bit and say, wow, what a trade. What a straight down to hell candle. But no, it's a nice, decent little drop. It's a start of something, and nothing really happened. On the daily, it's just a little, However, we can proceed now. And right away, I'm telling you what Maros said in the chat right now. Platoon, I read you. By the way, if you guys think I'm not reading it, I read you. Right there in the chat, he says, I'm holding it down to 36. This is setting up. If you're good with lower time frames, you have your short pretty much right now with a stop about, now this could spike, eat a stop, go a little higher. It looks like a setup, but it may not actually be a setup. Maybe this was the drop. This is the support. You could go all the way up to here, then get rejected, go sideways, and then drop. And then we'll start painting our little magic triangles and everything and say, oh, I told you, see, it was right there in front of you. But the truth is, by the time, speaking of the truth, let's take a look at one particular thing over here. Turn this off. Turn this off. By the way, look at our projection. It was supposed to spike up. This candle kind of wanted to. It was very close. It almost gave me what I wanted to see, but not quite. It didn't quite make it. Did not clear these stops. And I think there's a reason for that, because I think Bitcoin reserved that for later. And we'll come back to that in a second. These guys are celebrating too early, in my opinion. Here's what's going to happen. Now, there may still be a drop lower. I'll show you all the geometry that's relevant and bypass and skip all the garbage completely, all the speculation. Now, it is my belief that we just started moving, and the first initial move is not a confirmation of a directional trade that is set to continue going that way. The good news and the bad news that I mentioned about it at the start of the stream is that the good news is that directionally, I think Bitcoin really wants to continue moving up. However, it is expected that we see a correction, and many traders are looking at this doji and they're thinking, okay, we're seeing the start of the correction right now, but I would argue that we're going to chop and see even more crazy volatility. And this flag was nothing. If you thought that was crazy, it's not. By the way, if you're a MarketSpy system trader and you have the time on your hands and you were sitting here looking at potential profitable positions to play, I don't think there's a system in the world that gives you positioning such as this with the pyramids. Every time you would market buy or limit buy into here, you'd get a reversal. I mean, pretty much like minimum 500 here. Every spike, every time you had a pyramid over here, you had a spike, minimum 500. And of course, these two drops over here, maximizing that opportunity back to, let's go to 15-minute time frame and take a look at this range consolidation. For scalpers, MarketSpy is a total game changer, a paradise in disguise. No one's talking about it, but these pyramids were spitting out trade after trade, trade after trade, trade after trade. And these scalpers were positioned to take advantage of our supplied knowledge that we freely shared with everyone who had the curiosity and courage to try something new. The baselines corresponded to price action accordingly. And then we finally saw what now looked like complete disaster. We had our first dot over here go down, baseline reclaim, and of course we have a continuation pattern with two entries, one over here, no diamond, one over here, and the other one being over here, this distance right now, from here to here. A profitable $120 pickup. It's pretty amazing. I'm thinking next week I'm gonna sit down and I'm actually gonna start actively scalping, because there's way too much that's being missed and there's no reason to skip that. And I have these periods where I'd go at it aggressively, scalping for a month or two, make a bank, and then just chill. Now, scalps is not something that I can post to the platoon or do a stream on and share, because it's a very personal, fast-paced experience where every second counts, and management and coordination requires total communication back and forth open. We have to be in the same room or be live inside of our Discord and literally be in the same time zone, watching the same chart, executing at the same time. Which maybe the copy trading feature of Bybit Pro in the future will allow us to do that. But until then, MarketSpy is what I want to trade during those scalping sessions that are very personal in nature, but are also profitable if you time it right and sit out some of the filtered noise within MarketSpy and just try to understand the market structure overall. One characteristic of Bitcoin that we have talked about before is that when you have a hot pocket, as we refer to them right here, a hot pocket is when you have a very aggressive push through the baseline, which is unsustainable, of course. It creates an illusion on higher timeframes that sellers have stepped in. I have noticed this as a personality trait, a characteristic that is very specific to Bitcoin, where this creates so much fear that you hesitate to go long, and you're not really sure if that's going to actually work or not. But I believe that every time there's a sell-off like that, it's a great opportunity to buy into it, especially if you have certain strategies that you can rely on, such as one over here is the check with the dragon skin and the ongoing punch out that never quite faded, and it's still ongoing. And then we have this drop, and we don't really have that many transitional candles here, so I'm not really sure what to think about it. But this hot pocket is the first sign of price weakness, momentum weakness. And then when it regains strength, this is why we scale into strength. We short into strength, which is indicator based. Strength, which is not a second wave, so to say, not the initial, because price doesn't just go up and then instantly go down. It just goes up, looks like it's going down, buying opportunity. It goes up, stays there for a little bit, goes down, looks like it's going down. People think buying opportunity, not really, keeps going down a little lower. Now you have to look at certain levels to buy back in, but it is coming back up because first retest 2-3 times it will attempt to resurrect itself from the dead. As it's bleeding out, it'll try to come back, revive itself, come back to life, and will attempt to resume a trend. And that's one thing that you should pay attention to, is when you have that certain break. And this is only for when the market is trending and is reversing trades. So the first attempt, it never fizzles on the first try. As you can see here, again, it's happened. Now we can go back like a million years like this on Bitcoin. Yeah, I know, figuratively speaking, a million years, and take a look at these things and say how exactly. Well, we need to see a trend changing directional. So rebound over here, for example, it goes down, right? Very aggressive, finds support, and off we go. That's a trend reversal. And when you see a hot pocket that's failed, it's telling you something, that there's more strength in the market than weakness, because these things don't last, and the green tends to last for a little while. And then these present buying opportunities all the way through. So anyways, what are we looking at here? Right, so let's get back to the actual chart, present day. There we go. So dollar time for, let's go to 1 hour, just for a little bit of clarity over here. So a little bit of a reversal here. Now I'm going to share a chart with you that is an intraday specific chart, and it does not have a MarketSpy indicator. By the way, strength is still present here on the higher time frames, like daily. We don't have a confirmation of a downtrend, and I think that buying opportunity that we talked about is coming up. Now I don't know if this is going to continue falling immediately. I think not. I think we will chop here, and I'll show you exactly what pattern we're trying to create. For those of you who thought that this was the flag, they were right. Distance has been captured. The base of the flag, mission accomplished. There's nothing more. We have to assume that this is the end. This is the bottom. And the reason it's bouncing and will continue to bounce is, as a matter of fact, there's a chance that it will now go higher. Okay, not trying to freak you out, but we don't have a trade open. We're watching, and I'm just warning you guys, if you're trading from here on out, you're on your own. I don't have a setup that's currently live. However, after this wave, things will be a bit more clear. We'll have to wait another day, according to my time decay calculations here, from the looks of it. So let's jump to the intraday chart. Now, we identify the squeeze patterns as sort of layers of stages that need to happen before we can call it, before we can say that this is a definite breakdown and that we're going lower. Here's the intraday chart. Each one of these divisions represent a zone for one single day. Okay, and as you can see how the performance was relative to those periods. And we have been compressing above here, and I see an arrow set up, right? The If you remember, the initial versions of MarketSpy had something called shurikens. Now, it was attempted so that those shurikens looked at specific highs and lows to try to determine and understand if there was a pattern, a triangle pattern in the vicinity, and it would print this red shuriken to show you a breakdown when the mid-level or the median was broken. Now, it wasn't very consistent. Those shurikens were great in the initial versions of MarketSpy, which completely destroyed things like Market Cipher with its the signals were so coordinated that they attacked pretty much every candle that appeared. It was all recalculated, reassessed, and it sped out these beautiful shurikens. But they had to rely on a moving average in order to calculate above or below and how many periods back on price and the moving average together to give you that median, because it couldn't really draw this line and calculate the points of intersections. So it was removed, but we're coming back to it. And basically what you see here is that kunai shuriken, Japanese throwing knife pattern that we have. And it's split in two. It's split in two all the time. These are surfaces where price likes to trend. And I do believe that we have a bounce, which is going to continue ranging and going up annoyingly like this. And I think there's a line right here that will determine whether we fake out, break out. If we do, we have a continuation pattern. But under no circumstance do I recommend that we jump on this particular zone right now. I don't think I think that's it. I think we're bouncing for now. And people who are holding positions absolutely need to have stops. If that's your game, that's your plan, you need to have stops. And you have no choice but to put a stop right here at the peak. And depending on where your entry, let's say your entry was here. If you follow the stream, it should be like the median should be somewhere around here at 39.9 is what you were looking for in terms of this short setup. So between then, 39.9 to 4,700, you have about $800 distance that you need to accept that if this goes up slowly, annoyingly, sideways, and refusing to fall out of here, and then if it shoots up, that will get taken out. And I don't know what happens after that, but I obviously will need to have by the way, I'm not going to say that we'll need to have a retest. That is likely not going to happen. What I do think is going to happen is we're going to get a retest that looks like this. Bitcoin has been so plain to sort of identify certain setups on the chart that instead of these classical, we're going to shoot out and then come back and retest, give you a second chance. No, the retest usually happens. It goes up, goes down, spends some time, goes up like this, and boom. And that retest is like $200. And you're like, that wasn't a retest, but that's what we have to. The market is telling us this is how I operate. This is how my behavior is right now. I don't do your classical by the book retests. I don't do these $1,000 impulses up and coming down. I'm just gonna peek my head above and make traders question, is that a breakout or not? And if they're not looking at volume, they're not looking at momentum, I'm gonna trick them, because I'm gonna get stuck there at resistance for a little while, cut through it, $200 up, $500 down, $600 up, and I'm gonna die on volatility, create a mini bull flag that you won't see on higher time frames unless you switch over to 5, and I'm gonna shoot from there and post a 5-10% gain instantly from this bigger pattern that we're looking at. Now the intraday chart is showing us signs of compliance with this kunai knife slash shuriken ninja assassin pattern. And it can be argued that this is setting up to be one hell of a bull flag. This spot that everyone's looking at. The truth is, if Bitcoin fails and goes down, breaks from here, right? There's a certain level that I'm looking at. It will confirm that this was a corrective rally and that we're yet to see a lower low below 30K. So I think it's going to play a lot of mind tricks in here, and this is the perfect place for it to do so. Right here in the vicinity of the lower side of the knife. And you may end up looking at something like this, which is an inverted barred pattern overall, relative to what it's been doing so far. And so I think these things line up. We're not seeing it yet, but as usual, we try to predict these things in advance so that we can have a potential position before this thing happens, before the drop happens, because let's face it, here's what the books are telling us. The books are telling us right now that we have a flag, we have a breakdown, price goes up, we short here on the retest. Now let's think about this for a second. Let's say what you have to understand is that if this goes up here, right, it is likely going to get rejected, go sideways, go down, and then go up again like this, because this is what all traders, remember that guy in the beginning of the stream, the frustrated, like, I can't take this anymore, you're going up, you're going down, like, make up your mind guy, the no patience guy, the guy that lives inside of all of us, and every once in a while he comes out because this thing can do unbelievable dumb shit. I mean, Bitcoin's price can be very obnoxious and won't make any sense. Because we're trying to find some sense, it won't make any sense. But let's say it goes for a retest and you short it, but instead it continues to grind higher, higher and higher, and then finally has that impulse when you decide to go long over here, but actually pauses and instantly rejects, and people look back and they say, oh, double top. Okay, that's what it was. So what do you do? What do you do when you have studied all sorts of literature out there, you have followed lessons, you downloaded material, tutorials, and you know, your favorite traders are telling you, like, you know, wait for a retest. What they're not telling you is that a lot of the breakouts fail. Most breakout traders get wrecked because they don't understand volatility and delay in indicators that produce certain signals upon breakouts in conjunction with volume confirmation. They look at volume. We have looked at those things in volume analysis to understand what that actually means. The truth is, breakout is, to me, is the most riskiest, nonsensical way to trade, because, okay, if you're talking about flipping the chart, Alt and I, and you're talking about us trending down, and then we hit some sort of resistance and we consolidate, and this is a breakout, yeah. We're looking down. If, however, there's a breakout to the upside, I would be very cautious, and hence why in the last stream we talked about shorting this, because we went up quite aggressively and that was uncalled for. It's not sustainable. We were likely going to see like these deep cut pullbacks like that. One thing to note here is that here's a scenario, right? Let's play with mind games a little bit. Let's say this is a real breakdown. Then that means you're not getting a retest. Even if you want to trade according to the books, you're not going to be able to, because Bitcoin will not give you that trade. This is a short right now. But because you have that information in your head and you're thinking, yeah, but according to like these professionals and traders, we need to watch the market. Whenever you read a book or study a course, you need to open a live chart of the instrument that they illustrate on that page and only apply that information to that particular instrument, because at the time of the writing, they weren't picking random charts. They were picking the charts that they were trading all their lives. Most traders who wrote those books, they were most likely trading those particular instruments, and they're very familiar with them. If you apply that logic to something like Bitcoin, which is very liquid, which is very new, you may be disappointed and find out that nothing works. Nothing works, simply put. So spending time with these guys, price is very important, because you need to have a feel for it. You need to understand how the market tricks or deceives participants. Like whenever it's telling you something that is looking like it's going to happen, it most likely is going to do the opposite thing. Now, how do you know which one's which? So there are a couple of things that we can look at here and talk about a breakdown. Rule number 2. A trader would never tell you to trade inside of a range, and I support that, especially if you don't have the tools or algorithms to help you. But those price action gurus, they don't care. They will punt, and at this point, the majority of traders like to trade these points. Why? They take a position here because the stop relative to your take profit is at least 1 R if this breaks down, based on the base of this triangle. So you take all that, right? You measure it from here to here, and you move it down here, and you're like, okay, it's about here. So you put your stop here. Now you're limiting yourself, because if you put a stop here, the distance between like your entry, it's very tight for Bitcoin. It's very tight. It's $600. Now $600, how many contracts can you actually put that? Not that many, because it's a great distance. When people are trading bonds, for example, hell, corn, even commodities, chicken. Look at livestock. Look at those charts and tell me what you see, like the moves that you're seeing. The volatility is not that great because liquidity is so much denser and higher. So it's take a cup and fill it up with water. Try to move the cup left and right. Splish splash everywhere, right? Disaster. Gotta be careful over the edge and everything. Go ahead and try to move an ocean by willpower or by throwing a stone. Hell, throw a few 100,000 elephants into the ocean and see if it cares. Throw a couple of Volvo trucks in there, see if it cares. It's hard to move the ocean, and that's what those markets are. Bitcoin is that cup of water, mostly, and it is the most liquid crypto in the world. Think about that. Let that sink in for a second. And then you're having these volatile moves that, yes, they benefit you, but if you're playing it by the book, by traditional stock traders and bond traders and commodity traders, people who are, they like to play with ETFs and stuff, and volatility, Forex is a little different and not applicable here. Yeah, they have tight stops. Once they have a move, they have a confirmation. This goes up here. The sellers will be able to suppress it and push it lower, and it's kind of a very clean one way. That's why you have 12-year-olds that are making money in Forex. Whoa, wait a minute. Why am I wasting my time trading Bitcoin if it's so crazy? When I can, if 12-year-olds make money, I can do that too. What I mean by that is it's easier to it's much harder to work with. Bitcoin has the cleanest sort of, I would say, patterns that are identifiable, that are they just make sense. Forex, nothing makes sense. Yeah, it moves in these powerful single directions, but then you have periods where it makes sure that everyone is removed from the market at once, and those guys cannot protect themselves against those situations. So there's a trade-off everywhere. Like we talked about winning in the last video, you can't really win or get a deal or find an advantage somewhere else because everyone is looking for the edge, and those who find it, they tend to not spread it a lot because why would you? But now Bitcoin, your edge is you yourself while you're sitting there understanding these things that we're covering. Back to the retest. So how do you get in here without a stop loss? Because what would happen if this shoots up? We've seen that many times. Bitcoin does that, and will do it again. And this is just one specific setup that we went short on because we analyzed it well. But what I'm saying is this candle right here gives you no chance to go short here in the middle here. You can only go short like right in the middle when you're like, okay, it has to break this low for me to go short. So you go short, and guess what? That's what people did. They went short, and look, instant reversal. Majority of them are underwater because they got their confirmation signal, confirmation candle. These are the rookies. The more advanced users are going to be tricked into thinking that this goes up and I'm going to get a clean short here, and then it goes down, 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 and voila, I have myself a genius setup. Because pattern, breakdown, retest, short. But no, it's more pattern, breakdown, retest, rejection, stops, volatility dies, red, time to go green. And they're like, how? And why? Because you have one low here inside of a consolidation range. We're talking about a range right now. Another one here, and there will be another one here, completing this flag, because this little one was a pattern within a pattern that's developing right now. And we already had that planned. As a matter of fact, the picture inside of a thread in the platoon shows you that there's a bigger triangle that we're looking at here. Anyhow, these are the things that you must keep in mind when dealing with these markets, especially Bitcoin in particular, and understand what it's like to risk your trade and your capital here and try to basically get lucky and punt it. You punt it right here, and you know, it's rarely is it rewarding to be a punter. Every once in a while you get lucky. You get to have a shot here, but most of the times they do it with a market order sell. So market order, big size probably, that's already in the minus automatically. Like they have to hold it at least to here to make profit because they market sold it. If this thing goes up right now, they'll get terrified, close it, 2 times the fees of a crazy over leveraged position that did not work out, even though this was a confirmed breakdown. And so they're like, oh man, they get frustrated. They turn into that guy in the beginning of the stream, you know, they go to sleep, they wake up, it's all red. So we need to avoid that and not ever get excited, or there are no confirmed kills on the battlefield inside of the pit, inside of the arena that is the price chart, where everyone is battling out. Okay, you're never gonna know unless you're a data scientist and you're into like on-chain analysis, which by the time you finish analyzing it, this is what I'm saying, the traders and the people that actually sell you the data, they don't trade. They don't need to. Why should they do that? You know, they can sell you something and make money selling you on-chain analysis, which It doesn't really mean it. Sometimes it plays out and you only see that. You only know that Warren Buffett is the world's richest man, that he's the most profitable. Jim Simons, maybe. I don't know. You look at these guys and they're known for this one specific thing, but you have never seen his losing positions, have you? You have never seen an article about Buffett's K8 forum that showed like significant losses and which stocks were affected and how they repositioned themselves, reallocated their capital. You have never seen a multi-year underperformance of his portfolio. You only hear that he's one of the best. So when you see that a whale sold and then price goes down, automatically in your head you're thinking, next time that happens, I'll be sure to sell also. Market knows that. It studies you. It's a paradox. You're studying it, but it's studying you. It's planning against what you're planning. Like, it knows that, look, if I do this, so there's an inside joke in crypto. Let's paint the chart. The whales say, what's his name? Bogdanov? Dump it. Pump it. Paint the flag. Send the Korea FUD. Initiate, Crab 17 or whatever the hell, all these memes. And these are all based on people's experiences of what actually happens. We joke around too. We say, every time I go to sleep, things starts moving. It's actually always moving, but not how we would like it to move, not according to our vision, not according to our analysis. So we want to see this, it doesn't happen, invalidate it. It was never there. Your setup was never there. You did not get invalidated. You got nullified, liquidated because you thought you knew the market. But the market is trying to get to know you and millions of others at the same time, every second of its existence. It reflects back the fear and the exuberance and excitement and greed of others. And so you have to filter through all of that. Luckily, we have tools that help us, not only, when it comes to trading and executing these things professionally, like Bybit Pro, but also analysis like MarketSpy, which gives us pretty clear signals that we can rely on. That baseline reclaim on 4 hour was one early sign of this dump incoming, for example. And we were right there in the live stream looking right at it, dying momentum. Now momentum can be recreated using RSI, and you can put 30 other monitors around yourself and see everything separately. The MarketSpy gives you at a glance, and sort of come up with a strategy that works in your particular setup for your particular needs. But for most people, they get sick of things. They don't believe in having technology aiding them, algorithms aiding them, especially as a retail trader. And so they end up trying to guess the market, trying to speculate aggressively in the markets, and that leads to losses, plain and simple. That's how you end up in the bracket of the 75% that are always losing. So a period of non-trading stage happens after the move, and if we capture this candle, we need to wait and see. But I'm telling you, this is going to, I believe that this is going to be a bounce. And the stage that it's setting up is going to look something like this. It has to complete what it started. It cannot just break down and go down for no reason. It's too early. If it does, however, we have a plan to buy in. It would have made a significant, so we had a trade, fine, right? It's good. We don't need to chase it now in the direction. Bitcoin is telling us, hey, I broke out. Cool story, bro. I don't care that you broke out. Now I want to see if you can actually climb back up, pull your pants up, go up here and give me this pattern. Now, if you do, next time I get a signal on MarketSpy, I'll be long. And I'll know exactly where to look forward to. 42 to 43 in this case, before you exhaust completely, but you're not done. you little sucker. I know you're not done. And then, of course, if it breaks down, then we're looking at a level where we want to buy. Now, there's a gap. I'm not saying we're going to get to the gap. If we get to the gap, we need significantly higher prices and push in momentum in order to break down and make that move. It cannot be this. It cannot be like this, and the gap is right here, literally. It's going to take its time, prolong it, you know. It's kind of like a tiger that catches its prey. Well, let's not be, I was gonna throw humans in there, meat and everything, but let's just say a cat and a mouse, and the cat likes to play with the mouse. You're a mouse, I'm a mouse. The whole circus of traders out there on YouTube, they're mice, and the market is this big fat cat that likes to play with its food, liquidation, stops, and is going to do that here within this range. My direction from here is chop / sideways up. Then once it's completed playing with its thing, it'll throw it away. So we'll have a breakout and we have a directional setup that is now going to tell us where we're going. It'll all depend on momentum and the readings on the levels from DSR in particular, as well as Armageddon on lower time frames, equilibrium zones, its expansions, fanning out, and overall market structure with EQ3. Now, let's start from the very basics here and understand two things. We have these orange lines. One, this line, 39,571, was where we started to go lower and averaging it. So we ended up with a price that's somewhere around here. Then we had to go and take profit. And this was somewhere, actually I'm looking at, I have two charts set up, I'm sorry. I have another one that's more updated. It's on the other computer. I can't bring it in here right now. But okay, so let's again keep that in mind. We don't need to actually have the drawings for the sake of clarity. Let's just keep these steps in mind. One thing that everyone is looking at right now in particular is the trend line. It goes from here and like somewhere around here. We just bounced away from it. Okay, I think we're gonna grind against it. And if we come close to this resistance, I think we're going to break resistance higher. If we grind against it and we fail and go lower and really break it this time, then I think we're going to go slightly lower. That slightly lower is going to be sitting at, let's take a look at the next actual expected setup. Now that we got the basics out of the way, let's get rid of all that for a second. Should we keep the banana here? What do you guys say? Banana is the kind of thing that, I mean, we're the only ones that pretty much call this the bottom and say you should accumulate and buy within this range, the golden line right here. 100%, no stops, nothing. Just down to 28 and up we go. With an impulse that wasn't going to be a straight line, but hey, it was a straight line. Actually, the banana pattern itself is always a straight line. It's never stepping up. It's always a rocket ship. Okay, fine. I think we're done flexing here with the banana pattern. Let's just keep the essentials running here and switch over to 12 time frame. Okay, everything is peach perfect here. I'm telling you, this is going higher. Number one. Number two, let's bring the chart back here. Remember this pattern. Try to keep it in mind if you're thinking that we're going to go for the gap. There are a few things. We're trending and going to be trending in the lower part of this thing here, just like we have over here. Breakdown trade. And then there will be a decision point right here where there's a good chance it might actually break to the upside. Now, this is an intraday chart. I recommend you guys keep one open at all times. It's very good to just see like what's important all the way up to here and to here. You know what happened, breakout, consolidation. Now we're here, right? Nothing really changed. Nothing really changed. So this is the bad news part, is that we're going to be ranging, chopping, consolidating with excessive, steady volatility that is going to be very directional at a 45-degree angle, which will prove to be inconsistent in terms of like breakdowns, breakups, and that is going to come, and we're going to see a lot of that nonsense into the weekend. That's my assessment. I could be wrong. Hey, we'll have one of those days where things are not really what they seem, but so far so good. Let's keep the momentum going, and here's Bitcoin's performance so far. This was my last update before the bottom and the buy signal that we had. Another benefit to actually be part of our community. I don't know why people prefer fundamental analysis over anything else, but hey, have it your way. This is what I want to talk about here, the buying opportunity. So you can see there are 3 lines right here. Now this is a performance chart. This is not an intraday. You can see the price doesn't matter. It's just percent over here, right? And this is split by days, depending on like what the scale of days you're looking for. So for example, there's a 20-year chart, 1 day. So it's going to daily here, and we're pretty much back to the normal thing over here, right? In terms of like the gains and what we have seen so far. It looks like I may have cleared the drawings here. Did I? Yeah, I may have. I don't know. It doesn't matter. The reason I'm looking at this chart is because, first of all, I want to free up some space on my historical and intraday graph charts. But so you have your squeeze, done, played out, right? Let's quickly recreate it and highlight some of the key points here. Remember shurikens and kunais, the Robin Hood arrows that split charts in 2. Here we had one, we had a breakout, and right now we hit something. We hit some sort of a top, and this top is like bang on. It's right here. Now this is a line chart. Assume there are wicks over here. There are wicks, and the rate of exchange on different platforms is different. So roughly just about there, it makes sense. That's one line. Number 2, I believe that true resistance is in the region of, again, there's a wick over here that tapped into the resistance. We're not matching it to the close of the candle, which creates the line. These are only closes. There's no open. These are all closing prices of daily chart, basically. Closing prices. So the daily close here, close here, close here, close here, close here. And the rest of it is chop and wicks. Now, right over here, we're looking at a setup which splits the chart in 3. Now, just like the kunai knife over here, right? The vortex, the volatility vortex that I've talked about so many times already. You should already know what that is. We have it set up so that it's actually in the lower half of a bigger pattern that has a gap over here on the CME chart. Okay, there's a gap right over here. Again, this is percent, but visually, we're gonna take a look at it right now, tell you where it is. But we have that gap, and if we were to close the gap, we'll need to trend higher. And if this level 1, 2, 3 gets run, we'll have a steady increase in price very, very quickly. Now you're looking at these pumps and you're like, wow, like something like this? Yeah, maybe. But slightly, I don't think so. A little bit more strugglish kind of an uptrend. Now this is interesting because we're essentially, the market is telling us that I have found a multi-month range where I think I want to spend the rest of my time trending. So let's just assume that this is our pattern. What's cool about this is, first of all, no worries, we have time before anything significant happens here with Bitcoin. The other interesting thing is that in order for us to go up here above this resistance, right, we need to consolidate a little bit underneath it. Hence why I think that we're actually in that stage right now. So we need to consolidate under there. So roughly we have 1, 2, that's a range. And we have 1 right over here. That's a halfway meet you there point, you know, rendezvous point. And price made its target from the bottom to the top. Back to MarketSpy, going solo here, opening this up and going a little bigger so that we can see the details. If you guys want to see the full picture, let me know. If the TV is in the way, this is the pit. We're not looking at details, we're just talking about the overall setup here. But if you prefer a different view, let me know. Right, so here's this line. Go back to line chart, and we're going to weekly. Okay, check it out. 2 things here. We have a green dot. Don't get me started about what that could potentially mean with a wave like this. We have a green dot, number 1. Number 2, we are at a point where this orange line becomes the next support. It is indicated by these 2 thick green lines as a zone. This one right here is wick support. So this is the zone where the buying occurs, and this is the wick support and potentially an overshoot. If we're talking about the gap, which I don't think we're going for that gap just yet. So this is where the price is now on a weekly time frame. And we have the orange line, which lines up, and you better believe that when we come back down here, we're likely going to tap this green line at about 36.5. And whatever happens here, we will be in the middle of a pattern that looks close to something like that, maybe. We have to assume that if price goes down like this, then it will have to start trending, forming a bear flag. It always does. Okay, that's just the nature of how humans will behave here, and they'll create that pattern. And that's a big picture. We're talking about 180 days from now. And it's going to go up, it's going to go down, and it's going to do a whole bunch of things here. But this is just my overall macro view on things here. And here's what I'm thinking. The actual buying opportunity comes at a point where this blue line right here actually splits the range. This range. Every range gets split in 2. This is why your fib levels work. I don't use Fibonacci levels because I understand the nature of price action and what they represent. These are not some magical numbers that are found in, I mean, they are respect to Fibonacci. It's just that in markets, I can split go and read up on the quarter theory, and you can split your chart into as many lines as you want, and I guarantee you there will be a bounce every single time on every single line. Some not as hard, some very aggressively, and there will be this one golden line that actually gives you a bounce. Self-fulfilling prophecy is when traders actually define those lines instead of just random grid lines. They actually say this one's 78, this one's 32, right? Fibonacci. And they act on those numbers. They work, all right? Keep using them, nothing against them, but I'm just saying, some of us, we don't need them. Here's what I'm thinking. This support line here represents, right? Represents, what does it represent? It represents something that's called SR flip. An SR flip is basically this thing right here. It was resistance. We rested on it. We broke through it, resisted against it, came back down, found actual support, 0.1, 0.2, and then we flipped above it, and now we go slightly higher up and then come back down. We will actually come back down to this support that sits right in the middle of these two parts. What are those parts? Well, it so happens that is the 35. Let me go to 10-day. Or was it 10-day? Hold on. So basically, somewhere at 35 is what we're looking at. Here's a precise chart that shows you where that level is. It's right here, is this line, and it's very close to the gap. Now we can have an overshoot. This is our projection in terms of this price consolidation here, flag, and maybe an extension all the way up to this level with a wick that can close the gap and then come crashing back down to this level. So this is yet to come. I'm not ruling out that we may actually consolidate here sideways. Like I said, lots of chop. And if price starts creeping up in a bear flag manner, higher, and higher, versus like a bull flag that goes down. I know it doesn't make sense, but it just tells me that there are not enough sellers to push the price at a 45-degree lower angle, sloping down angle. And so if price starts to creep up like this, up, then I think this bull flag looking up, which many would call a bear flag, will actually break up. It will actually break up and give us this candle. Okay. Sucks because I want to buy Bitcoin over here, right? Don't forget. And that may take a while. Doesn't mean it's not going to happen. It's just, not happening anytime soon. So that, with that said, there's a gap, and we're drawing this like it's such small distance, but actually it's pretty significant. 33, that can easily occur, and Bitcoin's not even going to. It'll be like a little sneeze. That is all. In terms of like this consolidation here, yeah, could this happen? Are you going to see it if this breaks the level right over here? Oh yeah, it can happen, and it will post what would look like a fake out. There's an immediate threat of a trend line that spans from May 10th, right here when we dropped. And that trend line is going to pose a real threat. I don't see anything else in this consolidation. It's like, give me a break. Just do it already. Just do it, And then two things will happen. Either this will instantly get rejected, and then we go down like this and bleed out. And we consolidate here, maybe go a little lower, and then we'll post a double bottom here. right? This will be sometime in the future when the traders are actually going to take a look at this and say that, yeah, I can see it now. We're talking about it now for reference in the future because we want to be ready. Or this is one way. Or forget that. This is going to, as our previous analysis, this is going to break out over here. It's going to post a little fake out, close the gap, and immediately go for a retest of this grind line, and people will think it'll bounce. It will bounce over here, and people will think, oh, it's bounced. It's got it wants to go higher. We have a trend reversal. This is where it starts to bleed out, and then it actually goes back inside and slams lower. Then we have that will create a channel that will look like this. And again, we're projecting it way into the future, unlike all these other gurus, and we're telling you what is going to happen. And this is basically what we're looking at in terms of price action from here. So it will all depend on the technical indications from MarketSpy and what it will be able to give us in terms of our next trade. But for now, this zone right here, we're not done. And what you saw today was just a tiny little intraday setup that played out. Congratulations, but now it's time to look for the new one. To look for the new setup, we need it to post setup to actually understand what is going to happen next. Immediately, my bids are located right here between 36.6 and 34.7. Okay, they're sitting right there. I don't care about the gap. I'm not aiming to close it, but my bids are right there. And the reason is because this is a halftime right here. This blue bar is the halftime. If this is a range setup and this is the top, this is the bottom, this is a halftime, we're not chopping through the halftime. We're going back down, coming back up. Okay, so immediately for the intraday play, right, we're covering macro here because people are curious and they're probably sick of all these traders that are just like, spreading FUD or FOMO based on news and what Bitcoin could mean for the future. I was going to comment on altcoins, but we'll get there. If you guys want to, let me know if you're interested in altcoins. I have a theory of how the markets really work there and what's really going on. And I'll try to give you a little perspective in terms of, are you an investor or are you a trader? And if you're worried about the right things at the right time, or you're just being trained to respond to influencers. I don't know, let me know. Altcoins, but they can help us understand the market a little better. Now, from here on out down, it doesn't matter. Let's take a little break. We had a trade here to here. We took profit. This melted everyone's faces off, averaged out, closed the trade. Now we have this one right here. We had a little one. Cool. Next one's coming up. It needs time. I don't think it's a straight line down. If it is a straight line down, bids are already ready. A straight line down means an instant buy because an instant reversal. Not sustainable. Something that drops like an elevator like that will need, on this bullish momentum of a breakout from this pattern, there's lots to consider, like, a retest, gaps to close down below, So anyways, it's buying season on a deeper retrace. But it's also, the reality of it is that it's a messy consolidation that we're looking at, and it's not done. So the next pyramid above baseline reclaim, on a moderate time frame like 1 hour, it's a continuation trade. It's a reversal. Size up, jackrabbit it, close it instantly 5 seconds later. Walk away with that profit and wait for the next true setup that the charts will give us. We're going to cross on the momentum. Boom, switch to charts. What does this actually mean? Once we post a red dot, remember the drop started from always. It doesn't matter. The drop is not starting. The drop started, price is king, from here, and it's already dropped by 6%. Add another 5 or so. To make it 11. That's kind of deep. You trust me. 36, 35.5 level is our buy into this blue box. This is an absolutely highly recommended, not financial advice, buy opportunity, and it's also our HC. Boom. You guys know what HC is. If you don't, you need to hang around with us more, because we're killing it. Metrics, numbers. Look at that. HC sits right in the blue box as well. So it's a confluence zone. A confluence zone cannot be argued with. That's your final destination. It's your final answer. It's the core foundation of your plan. Once you have confluence, you cannot surpass. There's nothing more than that. It's the final Dragon Ball Z charge. Kame, you know, it's the combi. All of that energy is in that confluence zone. The trick is to identify that confluence zone, especially if not that many traders understand it or are hesitating to act on it. And the HC theory can help you with that as a starting point. Then you overlay it with layers, MarketSpy being the second one of them. Then you have your psychological levels or logical levels as support and resistance. Then you have your excellent management skills, and understand that when you're trying to dig in, there's time decay. Meaning, if price drops now to here, it's a market buy or limit buy instantly. If the market takes time to go to this level, you're dropping down your leverage. You're not marking buy or limiting. You're seeing if there's going to be a bounce and a baseline reclaim of sort, and momentum is looking healthier again. Because if it's a bleed out, we need a spill. We always are looking for a spill. Spill is where the shakeout happens. Spill is where most people just give up. Spill is where money is made. Not into small chop consolidation zones, unless, like I said, you're a scalper and you have the right tools like MarketSpy. If not, if you're trading with Cypher, Market God, RSI, this and that, oh, it's going up, oh, it's going up, you're wrecked. You're 100% wrecked. Counting numbers 1, 2, 3, 4, 5 on the TDI thing, Tom DeMark's indicator. This is Bitcoin. It doesn't care. It's different. So let's treat it as a very special, delicate thing that needs our attention. And it's highly rewarding if we dedicate our attention to it. Analyze more, trade less. And later on, realize, don't analyze. So 9, 14, 1, 2, 3, 4, 5, 6, 7, 8, 9. Do you need an indicator to tell you that this is the top, that we're going to have a little retrace? Not really. Spinning, inside bar, doji. It's a pin bar, and that's good. But is it going to be as severe of a drop as everyone's expecting it? Who cares? We're buying right here. Mark these levels. This is my final takeaway from this. For the intraday play, we kind of looked at the macro. We understood how this is a macro range, a multi-month range, that is going to be split into two sections. We also looked at how we're looking at that Shuriken Jitsu play. We have prepared ourselves for a possible gap closure and an extension fake out of the trend line stretching back from May, and what to do there. It's an automatic short from there, by the way. We're also positioned to take advantage of 35.5 and lower, to average in and finally buy in. Not only is it a gap closing event, it's also a retest of the powerful breakout backed by relatively strong volume, which came, by the way, at the end of this candle only. Not a good look for top longers. They don't account for the cool off period, and it usually happens when a lot of volume is at play. Our volume analysis video is free for anyone who wants to kind of change their perspective a little bit and understand that you have been doing it wrong, most likely, all these years, and that no one's going to tell you that. But this is what we have, and we're trading it now. By the way, all these white lines is just me marking all the other unclosed holes, and I was measuring like this hole, this gap, and this gap over here, and this was not closed, this was not closed, and they're very close to this gap. So it doesn't really, you know, we can come very close to it, and we don't need to close it. We don't need to close it now. But in terms of like our split level here, 35.5 to 36, this gap right here, the green range, the parallel line that runs on a weekly close of the candle chart, gives us a perfect zone of confluence that we can trust to trade. Momentum, anything just that goes back down into it will automatically spring back up. Price is king, but it cannot cancel momentum because the indicator is lagging. What does that mean? That means the indicator is showing you that momentum has started. It's not like the indicator is creating momentum and price is king, so price will cancel and make it fail. The indicator is telling you price has started accelerating some time ago. I'm telling you now, $10,000 later. So when anything suppresses it, anything pushes it back down a little bit, it'll spring right back up. Now for us and our strategies, you're automatically looking at higher time frames. Dragon skin will absorb all of that pressure coming from a daily time frame. Boom. Retest 1, 2, 3. It's a daily time frame. Don't worry about it. Think of it as a 5-minute time frame. It may fail the next time. Gap closed. This is how, by the way, for those of you who are curious, I also knew my confluence point was we were going to close the gap. It was measured at 4-hour ATR in the last stream. Here we are. We closed it. Instant bounce. This bounce should not be expected to be a power bounce because it's a 5 EMA. It's a very small period of price, and it measures actually this close of this candle. There's a good chance we can come right back up to here, away from this bounce, and then go back down again, and then again, and then again, absorb all of that pressure into the dragon skin somewhere around here, bounce hard away from it, and that will be the true test. This bounce here will be the true test of Bitcoin's willingness to reverse the trend. If it doesn't happen, well, we're going to be trending outside of that triangle below its better half. The upper half will be on the lower deck, and that would mean that bears could attempt to push it even lower, and that momentum has indeed died at that point. But I don't think that's happening. I think we're coming back up. What is going to happen here once we print a flag? Do you guys know? Flag on a daily time frame. We haven't had a flag here yet. Where do we have a flag on a daily time frame? Let's take a look. What do our flags mean when we have a trend reversal above the dragon skin? I'll give you a hint. It's a checkpoint. Now, where would that checkpoint be and how long will it last? Anywhere. Take a look anywhere. Any first flag. In a bear market. I don't care. HC bounce will still be okay if it doesn't want to go higher. Here's the setup. Any first flag. Now, we went back to February 19 and December 18. I rest my case. We're going to get that flag. What's going to happen is that once we get the flag, this dragon skin will absorb any sell pressure. And because of super high momentum on a weekly time frame that's setting up, it's instantly going to push the price up by a few thousand points. You want to be a buyer at that time. I will be. And when that happens, go ahead right now and do it like I do it. Set up an alert on MarketSpy. Let's do it together. Not add an indicator. How do we select MarketSpy? Yeah, select it right here. Add alert, and let's go and select the yellow flag. And we'll do it once per bar. We don't want to do it once per bar close. Once per bar. And all the information is here. Open-ended, notify. Okay, boom, done. So when that happens, it pings me on my phone through the Discord. I'm automatically casting my ladder into the zone that I projected, and it's EQ1. EQ1 is creeping up to be that zone, although it's just gonna be one of these. It's gonna be like, man, that's what it's going to be. Mark my words.
Oh, I will, CR. I will mark your words. And if this shit does not play out like you were telling me that it will, I'm coming for you.
Yeah, man. Gonna F you up, man.
You will not do anything. I will take care of both of you.
You guys are just... You're insane. You're insane. The Minion, the Demon, and Tonto, those guys are just... I don't know. I don't know why they're so attached. Platoon, let's look at the chat and see what the word on the street is. Crypto Star is in the house. Holy. Everyone is here. Our streams are so mesmerizing that...
Hey! Hey! Hey!
Stop the porn. Enough. They had enough of it. In the beginning, there was The Office. And then came the man. And the man was furious that Bitcoin was going sideways. You saw what happened. His first sin was he lost his cool. Do that. What do you mean I disappeared? I didn't disappear. I'm here. Okay, so let's see. Let's see, ladies and gentlemen. You know what? I'm gonna need to move this over here. Thank you very much. Right here. And this panel, it's horrible. You You guys have no idea what I have to deal with here. All for you so you can enjoy. Quality streams, not like that junk out there. Lazy ass affiliate link collecting influencers that are just, they're reading news for you pretty much and showing you how they're spending your money. Subscribe. Legendary trader. Enjoy yourselves. Well, you still can. There's only one CR. And when I disappear into the smoke, you'll be left with all of this. Everything that I know, yours for the keeping. What's happening there? Ferry Hendricks, appreciate the content you put out, man. You're welcome, and hopefully it's beneficial and you can participate and anticipate the next setup with us together here on our live streams. Speculation, Radar says, could be also bear flag. Now seems like continuation. Why do you see a reversal? I don't, all the reasons we just described. Where can I find this chart? CR, I'll send you a link, or better yet, post it to the platoon. You mean like the, which chart? There's all the charts are right here. This chart? I think I know what you're talking about. The performance chart, the intraday, day division, better than trading view stuff, right? 15-minute GPS max 7, 1 hour GPS reversal depth, but then the 4 hour red max 7. So how do we interpret that? How do we interpret that? Easy peasy. Kiwi squeezy. This is what we do. If you're playing the 15-minute chart, your trade, I'm looking at this wick right now, your trade already played out. You had your bump. 1 hour is going to retrace and then go back up. Yet to come. 4 hour, gonna take anywhere from 8 to 12 hours to actually happen. So if you have that 4 hour break, in order for it to confirm, it needs to go up first. Hence why the smaller time frames show you that price is going to go up in order to go down. 4 hour dominating chart tells you down. Smaller time frames saying, yeah, but first bounce up, accumulate shorts down. This is why we talk about it. So to put in perspective, you're looking at these setups like that. Many people are confused by MarketSpy and say, oh, this time frame says this, but this time frame says that. And I set all the alerts across all time frames. My answer all the time is, what time frame are you trading? What's your goal? What's your size? What's your time horizon? And also, what is your ATR value that you're looking to take profit on? Understanding the difference between time frames, when traders say higher time frames dominate lower time frames, they're right. But smaller tides bring the big great waves across all waters of the world. And it starts from lower time frames. From the 1 minute time frame setup, it transforms and becomes daily. It's actually both. It's alive and dead at the same time. The cat in the box, right? Bigger time frames influence smaller time frames, but smaller time frames initiate the bigger time frames. And the candles that are structured on bigger time frames take time. Small ones can change 100,000 times within that big candle. So if the 4 hour shows bearish and smaller ones show up, that means smaller time frames will only give you the 15-minute ATR max range to take profit before going down in the direction of the dominating higher time frame, which is 4 hours. Mystery solved. You're welcome. There's no other explanation for this. Hope it helps. Okay. We're all trained to respond in one way or another. I just responded to that comment. Freaking me out like that, man. Steven. Woo! That was, I felt it, man. It was, made me respond. One way or the other. You're right. It's just, it happens somehow, some way. I'm not in control. I'm not in control. we can try to be in control. We can try. Reshorted average price 39,500. Yeah. Not gonna be a part of that show, but maybe throw in a quarterly futures contract in there, 1x and quarterly futures at it goes up to 41.5 at that point, because there's a $1,000 premium. I don't know. Check what the premium is on the futures. Maybe put it in there and lock it in. That short doesn't cost you anything, no funding, nothing, and then you can like that short. Basically, if it goes down to 36 to 35, the future quarterly futures they're going to allow you to hedge that Bitcoin value. But if it starts to creep up and it's in the minus, you're still longing in the direction using your normal swaps, perpetual inverse swaps on Bitcoin that you can open and close anytime. And you can play that and still accumulate while that short is just going to sit there. Because trust me, we're coming back lower than 40. And I recommend the 1129 contract, I believe, which is expiring in 168 days if you're going to do that. 138, 156 days? I don't know. Just take a look at it. Looking to see another rejection at Fib, 23.6 and CPR. If you're talking about daily Fibs that are plotted on MarketSpy, we're at the bottom of the barrel, 78. I think we'll chill here for a bit. This square right here will get taken out. It's pretty much you have another 300 point trade here. But why? Nobody knows why. The algo. Okay? The algo knows. Now maybe it'll go up. But what's 15-minute looking like? Nice little rejection wick, which means we're going to go back up like a bunch of idiots, because it's supposed to be rejected and go down, but Bitcoin likes to like do the most ridiculous things ever. And it's like rejection wick. Yeah, let's cover that. Let's go and cover that before we actually get rejected. Meaning we show the rejection, but actually, wait a second, not there, not quite yet. So I'm gonna scale in 15-minute ATR. Just because I think this square is going to get taken out. All right, that's my hedge there. Like I said, it's gonna chop around here, and this is purely based on the signal right now. This is not me talking about the patterns and the stuff that we just looked at. But yeah, it's beautiful. You got pyramid reversals, bang, 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 profitable trades all over the place. 2 little hamster teeth right here. Inverted pyramids with close below all baselines. Equilibrium 1, 2, into 3. Buyers stepped in. It's just like it was intended. If you guys watch the boot camps, you should have the matrix vision already. You should see him be like, damn, how? No need to know. It is what it is. But very important to pay attention to these little tiny details. It's tough because you might miss it. How many time frames do you have? Unlimited number. You can set up anywhere from 1 second and go in increments of 12, 13 seconds, all the way up to 3 months daily, and then 1 year, you know, and get a signal. But of course, as an intraday trader, you're bombarded with information, signals. So how many alerts can you possibly have before you get tired? And what if you get one alert in 3 minutes, and another one came on 1 hour, and another came on 4 hours, and now you're sitting there trying to put them all together, but price is moving. And if you're doing scalping, you're probably already too late because it takes you too long to think and figure it out and make a decision. And you don't count that in, you don't price it in. And then it's already time to reverse. So it's very important to understand your time horizons and what you're trying to achieve. If you're sitting there all day long, sure, no problem. My thing is, never rush into it. When you think that time's running out and you might be late, the biggest lie you told yourself is that you may miss out on something. Markets don't wait for nobody, but also they don't run away from nobody either. They're just sitting there, and every second there's an opportunity if you can spot and plan ahead for it. Can you spot it? Sure we can. How? Well, it's all gonna come together, piece by piece, just like that. This is what we're dealing with here. So far, so good. Bring it back up. This is almost at HC of this move. Boom. Nice little entry here, potential. Very risky. But when you have a candle like this that represents like 1,000 other smaller candles on lower time frames, yeah, treat it as HC. Treat it as HC. However, this square will get taken out right here. This square right here. Price will come back down here. So account for that. Why is that? It's because this square represents this pin bar candle here, but it's delayed, it's late. So what that essentially means is that a retest of that impulse is going to happen. So that's why they get covered all the time. What do I mean by getting covered? This is what I mean. Not this one, baseline. I mean square like this. A square like this. Right here. It gets covered. Square like this gets covered. They're all below main baselines, except for this one. But you can pretty much count on it because momentum is looking down. But in order to go down, it first has to go up. So let's scale in for a potential small, tiny little trade here, if at all possible. I'm not going single entry here. Chaser, yeah, chaser. Now take a look. Chaser is pretty cool. Take profit minus 100. And you guys know what is going to happen here, right? Can I tell you? It's not going to happen now. It's a 1 hour time frame. It's going to take a while, but there's a new version of Bybit Pro that's coming out that's going to have automatic take profit ladder style on a chaser. Basically, place an order, get filled, scale automatically, take profit 1, 2, 3, 4, 5. Don't have to be near your computer. chase the price, identify your sell point and target with MarketSpy, set up your chaser Bybit Pro, walk away, come back, profit, the crops, harvest, collected, everything's in order. I can't wait. Chaser just got destroyed. That volatility spike of 30 plus. Someone market bought. They couldn't take it anymore. They couldn't take it anymore. They see RSI is rising, relative strength. Market buy. Boom. Just want to say, since using Bybit Pro and getting paid in fees and having the quant style advantage of MS signals, specifically pyramid with the pre-order dot, I rarely have been losing positions. I appreciate this comment. You know, if you guys want to say something as nice as that deserves like a, you know, I want to frame it and hang it on my wall, leave it in the comments below the video for others to see. Rub it in their faces, because they have no clue. And some people would rather spend 4 hours listening to this, excuse me, really deeply, but you know what I mean, then watch these videos that show them the ultimate truth. Shift the chart a little, CR. Oh, you're I see what you mean. I see what you mean. We're not supposed to we're not supposed to be having this. I don't know how this window came to be honest. I don't know how, why, but it's here. It's convenient. I guess, you know, I'm looking at the monitor and I see it. You know, I see it, and you see what I see somehow, some way. Nice. I like it. All right. Private matters. Need to go and liquidate my position, if you know what I mean. I'll be right back.
liquidated. It feels great. Now I see a lot of questions are coming up about the pyramids. The algorithmic prowess, that is. Told you before, guys, the Egyptians, they build pyramids from the bottom up. That's type 1, market enemy. Type 2, jackrabbit, is a scalp. What's the inverse of pyramids? I think it's time we did a little 20-minute segment for a MarketSpy refresher tutorial. Let's check it out.
In order for something to go down, it must first go up to find liquidity. In order for something to go up, we've just witnessed from the 29K bottom, it must first go down. Such is the law of the market. Now, we're looking at a 1-hour chart. It's decent. It's pretty good. And we're looking at a variety of signals. And that's a perfect setup for a little short explainer of what's what. Let's focus on market enemy type 2 inverse. Okay. Now, type 1, Crypto Multiplier asks, how do you ID the shorts? The pyramids show how to set up the long box, the long. That is indeed was one example that we looked at in the public presentation of market enemy. Now, we also had boot camps, which talked about these things, and we said that when we get to the point of these markets actually when they start trending down, we will look at inverse shorts. Now here, remember the trend is up, so mostly should be ignored unless we have a setup, which is confluencing, it's jiving with MarketSpy signals. It has to jive with it. Okay, your trend lines and everything else, squeeze patterns, it has to stay synchronized with momentum and your levels and your... By the way, moving averages are your trend lines. If you don't know that yet, you will. They're just shaped a little different. You have to be a little bit more creative to see them. But if I draw this in a perfect straight line, that's a human thing, you know. We tend to appreciate things that are more direct, straightforward, like a straight line. An average, a moving average, could mean a whole bunch of things, and there are a variety of strategies of how people use them. All of them suck, by the way. But for us, the reason we have equilibrium zones is because not only do they show us points of compression, expansion, possible consolidations and trending environments, they're also great to actually visualize all that stuff. Now, the colors on MarketSpy are not there for no reason. There's a method to all of this madness here, and it's actually the simplest thing on planet Earth. Is just that you need to have an eye for it, and people call it the learning curve. It's not that hard. So the rule is First of all, what are we talking about? Are we talking about trends? Or are we talking about fake outs that are looking like trends, but really they fade? Or they hit rock bottom and then just bounce when we think it's a short that's supposed to like go down for a little while, it doesn't? Are we talking about ranges, consolidation periods, where I recommend you get familiar with those, because most of your time as a trader, you will be spending ranging. Now, luckily, my name is Crypto Ranger, and I can help you out in that regard and help you decipher the most complicated scenarios that can occur within a chop zone, where, for beginners especially, or people that are not yet familiar with what they're trading, if Bitcoin is new in their portfolio and they're not really familiar with its behavior, ranging is not an environment you're advised to trade. So there are a couple of things to keep in mind here. First of all, by the time you see a breakout, it's no longer a range. So catching a breakout is extremely difficult. Also, many would argue that when you start ranging, you don't know that it's a range until you've been in the darn thing for a little while. And then you realize, oh, wait a minute, it's a range. But it's already coming to an end. Volatility dies off. Look how it starts. Look how it ends. That's why they call it volatility squeeze. So we're focusing on this segment specifically right now in order to identify a short setup. Now, we're not looking at any other time frame. One look at daily, and you will see that we've been going up forever. Nothing goes up forever. We also mentioned how smaller time frames influence bigger time frames, but bigger time frames are likely to continue for a little longer, obviously, just because of their nature. A daily candle could last a little while if it's red or green. Meanwhile, that daily candle could contain 20 other 5-minute time frames, time candles that go up, down, and all you see on a daily is a little push, pull, push, pull, push, pull until the close. Close happens, new candle opens, new hope. Traders get active. They start attacking that close or open. They push it in one direction. If they fail, price comes back to the close or the open on that intraday chart. Now, the pyramids in particular here they're wrapped in very strict rules, okay, that cannot be modified or ignored for that reason. In MarketSpy's case, when we see a pyramid, we need to look at two things. Number one, equilibrium zone structure of the indicator. Number two, momentum. And I would argue there's another third thing that you need to look at, and that has to do with your experience. Unfortunately, it's not something that you can identify, but you can apply a little bit of logic. For example, bearish signals at a very progressive trend up are likely signaling that it's coming to an end. When that happens, there's likely going to be one more push because of the momentum. Things cannot just come to an abrupt stop. It's like a car that goes high speed, and when you start drifting, hitting corners, it's you can't really slow down. You're still going forward, but you're slowing down. And if you look at the tire tracks on the road, it will look like price action just kind of arching and going down. So momentum slows down, and then there's a decision point if the car wants to go further ahead or do a 360, 180 and go back. So let's assume that you know how to identify a chop solidation, trending an environment that is going sideways. First of all, if you were able to see a resistance point, let's say we'll use this blue box as one, and price is near it, then it's likely we're going to range alongside it. It's not like we're going to hit it and reverse away from it. Rarely. Even then, when we reverse away from it again, that drifting car example, you're going to continue in the direction of the momentum, because momentum is really strong at that point. So regarding pyramids, all those things aside, let's say we have a pyramid right here, and it tells us on the close of this pyramid, if it's still there, you're opening a long position. Why are we opening a long position on this particular pyramid? Number one, unsustainable candles are likely to reverse than those that look like, so aggressive candles that look like they're going straight down are likely to reverse and pick up momentum because they exceed their ATR value. And that creates an imbalance in the market where expected bids versus where the liquidity, so the deeper it goes, the harder it falls, the less time traders have to close or open their positions or remove their orders based on fear or uncertainty or whatever. And so it absorbs so much from down below, where there are traders who are hoping to buy here or here or here or on these wicks, and it overshoots that, creating all that buy pressure, hitting stop losses, which further create buying pressure, because if these guys are long, basically they're forced to buy back in the minus when price slams back below their entry point, and so that creates additional buying pressure. In this case, when a pyramid shows up, it's a very strong buy signal. Two things that we look at is the positioning of what we refer to as the dragon skin. It's a combination of multiple moving averages, and as an example, you can look at a guppy indicator that combines a set of moving averages, which sort of creates this environment here. Now we have a specific number configured to represent specific moving averages here for a variety of markets. They're not specifically configured for Bitcoin, but they were identified as the ones that are more responsive across a wider range of financial instruments. If you're trading, whatever it may be, they will correspond and react to price, especially on assets that are more volatile than steady. So we'll take a look at stocks also and see what the difference is there compared to something more younger, like Bitcoin, more volatile like Bitcoin, high beta. So we have a pyramid over here that goes right into the dragon skin. We're looking for 3 points of, I wouldn't say dollar cost averaging, but 3 points of where the liquidity could be located using a price average in the form of a moving average. So this purple price average is basically like a trend line, treated like a trend line that you would normally draw on your chart. So it would be like, you see how it starts from here? This is a trend line. You can see what happens when the trend line breaks. There's another trend line, which is the faster moving average right here. And the top is not necessarily needed because we're looking for support and a breakdown in case of price going down. So if price starts to trend and close, the close is very important. If price closes below certain moving averages, which is its historical price X periods, X number of periods away from where the price is now. So if this line is 56, then 56 periods ago, it would tell you that the price here was good. So if you go back, that is the split pattern that we always look at. like this. Here's our kunai knife, and it shows us we're now closing below that line, and that's a bearish signal. We have pyramids that show up there. I want to get the reason I'm kind of hesitating right now going forward is because I realize some of you are watching this, and I don't want to mix things that are not in the bootcamp. So I'm just going to reiterate what was there in terms of like long setups. Long setups, you're looking for a punch through the dragon skin to absorb a lot of the sell pressure into it, because equilibrium zones are places where buyers and sellers are found to be battling for that particular price level. You can see how we tapped into EQ1. So 2 things to consider here. First, the fanning out of equilibrium 1, and the fanning out of equilibrium 2, and the final support equilibrium 3. Price moves in usually 3 waves. Ellioticians, technical analysts who use Elliott waves as their core tool set for price analysis, will tell you that there are waves, extensions of them, and corrective waves in 3 stages. Think of these equilibrium zones as a simulation of an Elliott wave theory, but on a much more it's a much more precise, specific sort of coordination between price and these waves. And so when we tap into equilibrium 2, I'm not saying that it's going to happen, but it's expected that we will find buyer interest if the price is above it. If we're below equilibrium zone 1 or 2, sellers will be fine. It means that the sellers are dominating. Price is now trending lower than its average of these pre-configured moving averages. That means price is now looked at as not undervalued, but it's not as attractive as it was, and it's losing momentum and it's trending down. So that happens when we close below the moving averages. We'll talk about this particular situation here. These setups are not going to be perfect, like pin perfect when you touch the line and bounce away from it. It happens sometimes, but most of the time it asks for your discretion to interpret whether this move was sufficient enough for you to consider a buy here. So filtering all the noise, we can use a couple of things here. Let's move from here, going from this pyramid to this pyramid to this to this to this, and see what the difference is. First of all, green candles, strong momentum, an aggressive punch that took out all of the moving averages here in the dragon skin. When it's thick and expanded like this, think of it as there are orders sitting waiting to be picked up in those regions. However, price needs to go through all of them to do that. In the equilibrium zone, the struggle between sellers and buyers happens here. We know that when price is above any one of these equilibrium zones, consider this point here or here or here, that there will be sellers. 3 strikes and you're out is a universal rule that applies to markets too. When a baseline reclaim happens, you can expect maximum 3 retests before the setup fails and it's a short signal. That's because the time that's needed to create each wave and bounce between them it's getting more advanced. It requires more energy, and the market just cannot provide for that because it's not like there's infinite money out there. There are waves of investments, and traders who use leverage can also afford only so much before things go south. And so typically those are the 3 waves. That's the foundation of our core principle that talks about the 3 L's, the 3 knees that happen in crypto markets and other markets before we need to step back and reevaluate. So we have these 3 impulses after which we will begin to lose power or interest, or both. So valid signal. So knowing that, we have to automatically assume that if we see 1, 2, 3, 4 pyramids, I mean, we can't expect to keep seeing them and price keep going. Then Bitcoin is just going to be $1 million overnight, because every pyramid will just push it high, 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 high. So why do we have quant firms employ people? Why is it not just automatic robotics where everything is just algorithmic and there's no humans? They still have full-time staff and people who need to approve or disapprove of what the robot tells them. That's because discretion, human discretion, cannot be substituted by any automated system. That's why anyone that promises you an automatic trading tool that just does it for you will, in the long run, put you in the minus. That includes bracketing systems that are sort of putting orders above and below at the same time, and they're letting the price go. It only works in a trading environment like this. Once you have a breakdown, you're automatically underwater, and there's nothing you can do about that. If you're not trained, you don't know how to average, you don't know how to manage risk. You're not a risk manager, you're not a money manager, you're done. You're a gambling trader, and so you're in trouble. So algorithms require human input. Our input is as such. When we see these pyramids, we have to be very careful and conservative in terms of, I look at it this way. I missed 1, 2, 3, 4. I'm coming at the end of it. I'm like, I see another pyramid. I'm not longing it. I'm not saying because we had 2 of these over here and they broke down. As a matter of fact, this one was a profitable one. You're not going to say, you don't want to capture a $100 pump that is 100% correct. A $100 pump from your entry on 5x leverage? Tell me you don't want that. But you have to take profit. You have to know that as we squeeze, according to the squeeze pattern, as the moving average gets closer with price, as a matter of fact, let's get rid of this price and put a line. When the line crosses the moving average right here, it's over. A moving average is just price line delayed by a number of periods, which calculates what it was worth based on a formula some periods ago. And when actual price, current price, crosses that historical price, which is the purple line over here, not only the purple line, also these lines are all historical lines, but they move in zones as opposed to just price. They kind of calculate the volatile nature of these movements, and they create these gaps. They create this gap, or they squeeze sometimes over here. We'll talk about what that is. And so when price crosses one of these moving averages, price crossed itself in the present and tells you that whatever it was worth in the past is not going to be worth that in the future. So it's going to go down. When algorithms see that, they act on it and they unwind their positions. They don't want to hold them anymore because the historical average on the intraday chart is telling them that it's not worth as much. People are now willing to pay premium. There's no that deviation from the mean. You know, it's very close. It's sometimes they fake out. So we'll talk about how to identify those things that look like they're going down, but then they instantly go up. So this pyramid, long boom, long boom, long boom. Remember, every boom, price squeezes, volatility dies, and candles get smaller, which means ATR values get smaller, which means take profit becomes your core focus. First pyramid, you can allow it to run for $1,000. Second pyramid, $500. Third pyramid, $2. Final pyramid, maybe $50, $20, in and out. The next pyramid, now you're looking at equilibrium positioning between where the price is, where the pyramids occur, and if they're under the moving average or above. Now, our baseline one, our main moving average, which is the baseline of the price, is what we look at the most. It's not perfect, but it's damn near, it might as well be, because when we see red, we have let's flip this around. So let's say this is the bottom after a dump. Stay with me, right? Like imagine this is dumping and now it's time to I don't know, there's a baseline reclaim here and we're seeing red, price dumped and went back up. Bullish candle. We don't care. We have rules. Our rules tell us that when that happens, it's a retest. As a matter of fact, this is why we were scaling in 2 days ago into a short and we had to wait all this nonsense out. We scale into a short because we know there's a retest that's coming. A retest is simply once the reclaim happens, depending on how aggressive the reclaim is. Sometimes we might not get a retest, and I'll explain why that happens. But the more aggressive the reclaim is, then the impulse away from it, the more aggressive the retest is going to be, and that's our point of entry. We also know that pyramids represent an instant reversal for us intraday traders or scalpers. But we're also looking at, let's consider like this pyramid over here, for example, right? Or these pyramids versus these over here. How big of a reversal can we expect? First of all, we've been going up for ages. So you're probably at the end, you probably met some resistance that actually means something, that the probabilities of that go higher. You're not in the beginning of the breakout. You broke out, you went up, you saw volume came in, and you had a hot pocket over here. And now you're having these pyramids and they're all trending below the baseline with like ugly yellow X's, which are short signals. Now let's say we want to go short on a pyramid. Consider that inside of a trending range, your entry here and your exit here is the same as if you're shorting your entry here and your exit here. On the pyramid, your entry here and your exit at the baseline here is the same as the entry into the short here and your exit at the next bull signal pyramid here. The distance to take profit and from entry in terms of this algorithm is the same. Pick your poison, but understand the trend. Now, during a consolidation, like I said in the beginning of this little review, is that we need to understand, are we talking about trends? Are we talking about consolidations? Are we talking about breakouts or breakdowns or reversal signals, tops or bottoms? They will all have, they require you and your input to assess this. Consider that any robot that doesn't have eyes and AI scanning features cannot really tell you where the top is or where the bottom is, because people decide that. People are trading, putting in their money, they're taking profits at specific levels that they look at. The algorithms have no idea what the price is. They can only understand certain things like wicks, for example, closing price, opening price, where has it been for the past 2 weeks in relation to its current positioning here, how long have we been bouncing up, are we below certain elements like a historical price that was 2 days ago versus now, or 58 periods ago, 125 periods ago. Momentum only knows that I oscillate between 0 and 100 in case of like Awesome Oscillator, for example, and it says, price RSI knows, I'm here between like 25 and 50 is bull, bear between 50 and above that to 80, I'm bull. And and sometimes you see RSI go to 80 and people say, oh, it's oversold, but price just keeps going higher and higher and higher and higher. What gives, right? There's something that's going on there, and we need to be aware of what that is. Now, in my book, momentum, these waves, when they hit the rock bottom, unless it's a range, it's not really an oversold signal for me. It's a continuation signal, but the way it works is that you need to understand how market moves. In order for it to go down on that signal, It needs to go back up, find some liquidity, and then from there go back down again, because now it picked up some fuel. It accumulated some of that energy that's needed to push the price lower. So no one wants to sell at this level. So price will just go sideways, and we talk about 1, 2, 3, 4, 5 candles not moving. That means there's something in the way. There's something in the way. Now price will attempt to go up to find sellers higher. Where are these sellers? They are inside equilibrium zone 1, right here, and equilibrium zone 2, right here, maximum. If we run through that, then that tells you there are no sellers. And the algorithm simply does not know that. It just tells you that this is where the machines and humans are most likely positioned to sell based on the historical price and volatility that I calculated. So I think this EQ based on these periods is located here. This is where the trade will commence. You know, between merchants, they'll say, hey, I'm going to sell it to you for 5. The other one says, nah, I'm only going to give you 3. It's like, no, screw that. How about 7? And you know, we have this sideways action and then when the deal is done, they're like, all right, done. $1 million. And they go, right? And it was like, you know, the bid is over. The bid is over. You're bidding inside of a range, and now it's over. So this is how you look at these markets and these signals. So what do you want to do? Do you want to go short here or long? Everyone is wrong and right at the same time inside of a range, because price is not going anywhere. It goes up the same distance up, goes back down the same distance. Unbelievable. Just when you thought it was going to break out, you're not aware it's a range. Now, nobody knows it's a range until it's actually created a flag pattern. So that's why traders tell you we need to wait for a confirmation. Now, if I have MarketSpy, why the hell would I wait for a confirmation? Yeah, I don't know where the price is going to go, but I know while I'm inside this range, I have a couple of options. Option number 1 is I'm going to be buying these pyramids a few times and making money. Hitting the rooftop over here at the equilibrium zone, selling it. Buying it again, hitting it, selling it. 90% of my position out at the first sign of resistance. I don't care what it is. I don't care what the ATR number is. 90% out. The rest of the 10, it can ride. Now, when you do that, you bought, sold 90%, let 10 ride, stop here. Boom, bought again, sold at the first sign of resistance. How many periods later? 150, 197, right? Sold, golden, let 10% ride. None of these stops get triggered yet. You keep doing this until the end. You bought, check it out. You bought over here, price went up. First resistance, you're closing below this. You already know we're very close to something. That's on you. If you think that this owes you to go up for some reason, that's on you. You have to make that call and say what it is. The pyramid is telling you that the whole time here, I've been bearish because I am below the equilibrium zone. Here's a pyramid and it tells you I am below the equilibrium zone. Well, price goes up and you're like, what gives? But the thing is, price goes up, hits the top of the baseline and goes back down. Back down, it's supported by, you should see that in advance. And you should say, if I'm short here, my stop is here. And my take profit is here. You should automatically assume that. And then when you look at this, you're like, okay, this trade right now, breakdown, reclaim, support, like this is not a 1-to-1 ratio. The risk to reward here doesn't make any sense. I stand to lose more than gain on this tiny little thing. But you may be saying to yourself, well, what if this doesn't hold? What if it goes back down? Because when we're here, at this price level, right? You're thinking to yourself, well, what if this candle closes below here, below the baseline, and that's kind of like a signal to go short? Maybe it's already did that here, maybe it'll do that here, and it'll finally break down. It's a bear flag. Yeah, could be. Can't argue with that. Okay, maybe. But what shorting does is that you go short over here, it absorbs, goes back up, you hesitate, prices here. So your distance is technically, realistically, your entry and your exit is $200. Okay? So to make that decision here, you can maximum take probably like 151. And you're like, what the hell is this, man? Why would I even like short? But let's say you are short and you don't care about risk to reward. You just know that there's an opportunity there. Maybe you're looking for a scalp and you don't have four hours to wait. You have a 1 hour time frame with a setup over here, and it's falling, and you're like, I'm gonna go short over here. When it goes back up, I'm gonna sell right here. Whatever, I'll capture like half of this candle. Half of this candle is $300. Then you go back to look at your ATR, and you're like, yeah, that's the ATR distance minimum. So why would I not take profit when CR has been drilling this for years on end, telling me that I need to take profit? For sure. Because if I don't, I risk to lose more. But what if you want to ride this and say, yeah, I don't want to exit everything? That's why I tell you, the way I was taught is that you take 90% of your liquid position out and you keep 10 running with a stop loss that has to track it. Because if that 10% remaining, the price goes up and hits you over here and moves by $900, it'll kind of average out your gain, and at worst, you'll break even. At best, well, you'll make a little bit of profit of that 90% position that you just closed right here. And you don't get trapped in these kind of, I don't know, it's a difficult candle right here. It looks pretty right now. All these gurus will tell you like, oh, look. Dragon skin, you know, like, do you have the balls to actually short this and take profit here? That's what I mean. Pyramids that appear below the baseline 1 are bearish signals by nature. Pyramids and there's no equilibrium zone support. So such as this over here, there's no equilibrium zone support. They're below bearish signal. They don't have any strength to push the price up anymore. Then you look at momentum, you're like, this thing's gonna die. It's a bearish divergence. By the time it happened, you had 1, 2, 3. So bear divergence plus pyramids, 2 of them consecutively closing below the average. And you're like, yeah, it's happening now. And then bazam, it goes down. So, okay, you say, but what about this scenario? Okay, what about this? We're below and we're trending, grinding up against the red flags all over the place, you know, checkpoints, dragon skin, whatever. But we have a pyramid over here. And why are we not short? Because we're below the baseline. You have to understand that momentum here looks a little too strong. It's all in the green. It's all in the green, massive blue waves. Now take a look at this. You are supported by CPR, right below, right here on the CPR. And this pyramid shows up right on the CPR with a wick that bounces. If I turn everything off, this wick alone is the greatest of them all in this range. So something's going on here. Lots of interest here. Even though you don't see the volume, something's going on here. Price starts moving, we have a breakout, and people go nuts over here on these volume bars. And momentum is picking up again, so we're out of the woods. Here, you can apply a classic trading style of saying that, you know, resistance, failed punch out over here, and we're breaking and volume is accelerating, and you might as well just go and chase this at that point with a market or limit or chaser, and then just ride it. So if you capture a fraction of this candle at like $800, that's a beautiful, beautiful trade that you don't need to worry about that you didn't get in here, you didn't exit like over here. All you need to do is capture something that is profitable for the day and just leave it alone. That's all you need to do, because trade to trade, all of your trades are going to look similar. This is what you're looking to accomplish. That's why people don't really look at price, and they just need to know the direction. Professionals, they're trading basis points. They don't really care about getting in here, exiting here. No one's gonna shout at you for closing your position early. You made profit, good for you. Find the next setup. Fuck out of my face. Excuse my French. That's the reality of it, right? So second thing is that's momentum. That's momentum, and you have equilibrium zones. Let's review one more time. Equilibrium zones are aligned and fanning out. One more time. 1, 2, and 3. Think of it as like support over here below, up to the equilibrium zone too. And when they fan out, you see what happens. And then there's a contraction. Contraction happens when, look at the equilibrium zones here, 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 here. Okay, messy over here, messy over here. Look at that, look at that, look at that nonsense. Okay, what's going on here? Let's take a look. Look. Pyramid. Equilibrium zone. 1, aligned. Just like what you're saying, CR. 2, but there's like conflict over here. Very, very important. It's not like, I can just like not look at that, but there's conflict. There are crossovers that you have no idea about it. You have no idea about it, but it's happening right in front of you. There are crossovers of all sorts where there's a conflict of interest basically between these equilibrium. This is not an alignment. Second thing, 3 L's. Can you see the 3 L's? I sure as hell can. The concepts that we talk about here, 1, 2, 3, red dot, flag, boom, losing support, pyramid. Now you're saying, okay, let's say you went long on this pyramid for whatever reason. The pyramids are such that they require you to place a stop loss on the nearest wick in the vicinity. I don't care what it is, you need to find a wick for a stop loss if it's a jackrabbit. I'm not talking about the type 1. I'm talking about the instant buy and reversal, hardcore, the adventurous type trade for scalpers, right? They want to go long. And let's say, what do we know so far about the pyramids? Rule number 1, a good pyramid plays out within 1 candle. Not 2, 3, or 5, within 1 candle. And it usually is a reversal on the first candle. As soon as you enter, you should be profitable. If not, if this thing drops, right? And you're like, but that's not a small drop. It dropped and it printed a dot over here, which I told you before. Pyramid, post dot, not good. Dot, pre-order dot before the pyramid or on it, consider it. This, be careful. Now, there's a little something that you have to, this is called analysis for a reason, is because you need to kind of zoom out a little bit and not pay attention to the pyramid and say, wait a minute, I'm seeing this. I'm seeing a baseline reclaim, retest, failure, and a bear signal followed by a pyramid, right? Like you're thinking, why would you long this? Like I would hesitate. And if I'm longing, this is why we have 2 modes. If I'm longing this, I'm thinking, type 1, here we come. Type 1, what does it require us to do? It wants you to find a wick over here. Once we have a signal, because you know, if you see normal candles, it might not even play out, or you shouldn't be doing that. And we have a second signal right here. You measure the distance, and it should be at least 1,000 to 2,000 max, or equivalent of daily ATR. These pyramids within a daily candle usually last for about that long. So is that something that you can average into? Where would your average price? If this is the HC, your average is somewhere around here. Let's see. right here. So if you scaled from here all the way to here, you got in right over here. What does that give you? Instant profitable 500-point trade. 90% out. Stop loss. Price goes up. 10%er runner gets you in another 1,000 points right here. We call it 100 points. So, okay. Kind of makes sense. But what if you're not the person who was around here and you don't care what happened here? You're looking at these things and these things are telling you yellow short, which is potentially telling you that we may extend lower. Be careful with these pyramids. This is not a short signal. It's telling you that we may extend lower. What do? First of all, I look at momentum and I say, there's no yellow. There's no VVS is not showing me. Volume and volatility stress test on price is not showing me that the test results that are needed to confirm that this is a short. Remember, the algorithm does not know. If I zoom in right now like this, it does not know where the price is. It doesn't know, like humans know, that Bitcoin is too expensive. Holy shit, 100K per Bitcoin? Wow, that's expensive. MarketSpy doesn't give a crap. It says, you know, I'm looking at this thing. I'm seeing a setup. What do you want to do about it? Now you have to apply some logic and say, okay, we've been dumping below the baseline all this time. We have a stop square second in a row. We have a green dot and follow right away by like momentum failure, yellow X's. I don't know. I'm gonna see what happens. If it goes lower here, takes this out, I'm gonna see what happens. Is there a support? Goddamn, there's a line here that I drew from a long time as support. So what's my distance? Where am I putting my stop loss? Right here or here? Does it make sense? For a trade that can go like down to here maximum, down to here max, I don't know. It seems like the risk to reward ratio is not that great. So you wait it out. It goes above the baseline, boom, sign of strength. What does it need to do? It needs to do a retest. It goes back down, retest, impulse up, impulse down, boom, pyramids. Price is not going lower. You're like, gotta be some support. Bullish divergence. Trend starts, reclaim. You're somewhere around over here and you're like, yeah, this is looking strong now. You go long. And this happens, right? Structurally, you know you're below, but you go long. And from here to about here, anywhere here, you can capture 300 to 400 point, 90% out trade, right? Set your stop loss on 10%, see what happens. Price dumps over here. You get taken out, you lose nothing, you're managing along. Second setup happens, same thing. This is all an hourly time frame, and it goes on and on like this. And your discretion here is very important. As long as you're managing it well, you should understand that anytime we're above the baseline, feel free to skip some of these signals. You don't have to take every signal that shows up. But let's say some of these like that, they show up and above the baseline, long signal. Below the baseline, short signal. Just understand that when you're placing your stops, you have to assess whether it's worth the risk. Because sometimes jumping from an airplane is not worth the risk. It may be fun, but I don't know. Do you really want to do it for fun? It's your life we're talking about. So there's a lot that you need to keep track of, because price can and will do silly things like this. Algorithms does not know if it's a range, if it's a top or bottom. It just tells you a setup. The rest is up to us. But as far as I'm concerned, like what I see here, the structure shift happened a long time ago. Somewhere around here, we kind of like went chopping through it pretty aggressively here. But structurally, price is kind of trending below all equilibrium zones. So I treat them all as bearish signals. Inverse market enemy. I'll tell you inverse scalps. Stop squares are periods of consolidation or pause in a downtrend. They are the equivalent of pyramids, but they show up like so. Okay, not below. We couldn't place them above because we have flags and a couple of other elements that are in the way. But a stop square is basically telling you that I'm going to take a little pause. Where that pause happens is very important. If the structure, notice equilibrium zones are all here. If the structure allows for it, this is a trending environment where we broke out, we're going for a retest, we come back down. This is a sign to go short. So you can scale in or you can short right on the spot. It's up to you how you want to do it. But let's suppose that this was a short signal and you go in. You can see how much support there is for a short setup down below here. You can see how we have the CPR, which is weekly. We have structural change, trend line, equilibrium zones, dragon skin. We have a reclaim, retest, another one into the dragon skin. So what you're doing, what they're the equivalent of flags, not pyramids. My bad. So if these were checkpoints like flags on an uptrend, these are bullish checkpoints in a downtrend. Does that make sense? I think it makes sense. Here we go. Here's 1, here's 2, 3 checkpoints, 4, and you already know how to treat checkpoints all along. And it's telling you that you're going to be capturing shorts all along. And you can do this all day long because we're not looking to stay in the trend. I don't go short over here and hold it until here. Because when a reversal happens, how do I know it's not real? Structural change here, you can clearly see when it happens. When does it happen? You have a breakout, equilibrium zones expanding, and price is now below, or in this case above, the equilibrium zone. It's all green. Assume that all signals from here forward are bullish signals until we get that structure change again. Here it is, here it is, here it is. Watch. It's going to be happening here, but it's not. We're not there yet. We're not there yet. These have to compress. Price has to do what it has to do. And then we'll get a breakout. So any pyramid that's coming up is a buy signal in this case. At the same time, you're looking at the trend and you're saying, we've been going up here. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 pyramids. The next pyramid that I see over here is going to be a long. But not if I see a pyramid right here, I'm not going to be longing it. I might consider shorting into it. Why? Because your stop and your risk to reward ratio is greater here. You can go all the way down here with a stop placed over here. For example, looking at it structurally. Hey, my battery died on my headphones. I'll need a second. Hold on. Hey, we're back. Sorry about that. Yeah, this thing runs on battery, so I need to change it once in a while. You will know how to identify market structure during chop solidations. Don't worry about it if you go underwater a little bit. If the equilibriums are like, all the zones are like intertwined, entangled, you'll be okay. Once price is below all of them and it starts to expand, right? You have a trend shift, you better do something about that position. Don't even average it out. But it takes a long time, as we have just witnessed, for it to occur. Look at that. A long time. Let me get rid of everything. And just, I want you to look at the equilibrium zones and moving averages. Squint your eyes and just look at the purple line. And tell me, what do you see? You see clear trends. If you're anything above 50x, we never go above 1x. You'll get wiped out on a $100 move. 50x. No way. Crypto multiplier. There's no way. We have a I don't know if you watched the video last time, but we basically looked at leverage, how to identify like what leverage you should be trading with. So it's determined by the number of contracts that you put in on a trade, and it should never 1x is basically what your account value is worth. Inverse swaps, perpetual inverse swaps are quoted in USD. So whatever the price is of Bitcoin, your 1x is that amount of contracts. One contract is 1 USD. So if Bitcoin is worth 30,000 and you have 1 Bitcoin, then your 1x leverage is 30,000. 2x leverage is 60,000. 3x leverage is, you get the point, 90,000, right? So 50x, you are simply not allowed to trade with that leverage. It's I don't know what it is. It's no, don't. This is if you want to survive and make money consistently. But if it's a question of how much do you want, a lot, then you must put a lot. You know, if you want to make, say, 1,000 here, 1,000 there, Bitcoin minimum. If you want more than that, well, you have to invest in it and treat it like a real thing, because then you'll really care about leverage. It's funny because if you put $1 million in, you're using 0.1 leverage at most, and that gives you good profits. That gives you like good profits. You know, you can live off of those profits. You do a couple of them a week, and you're good. 0.1 leverage. Anything above that, $200 distance stop loss hit, boom, 20K gone. So you cannot go on 50x or 3x is pushing it. However, if you're trading with leverage up to 50x, you're trading pyramids and you're taking profit $5 later. 90%. And 10% of that 50x it's already exceeding. So that's a good size. That's a good size. So if you can get in with Bybit Pro like this, let me show you something. Let's wait for a signal. So if you, let's say you get in with 100K to open a position on limit and close a position on limit on 100K, you will automatically make around $80 profit, which depending on what your account is, could be your 1% for some, you know, if you're just testing the waters. For others, that's a 0.1 instant gain, 0.1% of your account, which is also pretty decent, I would say. You do it 3-4 times a day, you step away from it, come back tomorrow, because somewhere along the way there will be a trend change, and you want to be ready that to take advantage of it and not be stuck during the transition from the trend. Like, you know, usually we get stuck during transitions from a consolidation or a major trend up and then it reverses, or the other way around. That's when you can get trapped. But for the most part, trading, like, look, this is a 5-minute time frame. Pyramids are showing up after the dump above the baseline one. It's worth the risk. You're long here. Now, obviously, you're not holding it all the way up to here. What's the ATR for 5 minutes? $34. So if you're going 50x on a pyramid, boom, $34 is 1x. Boom, you're out. You're out 90%. And then you're holding of whatever that 50x for a runner, and let that runner run. 10% of your position stays in the market as a participation fee. But you just got paid on limit to open the position, got paid on limit to close the position on 50x. And $34 later, you made way more than what you most likely deserve based on your account size on a 5M ATR with that kind of leverage. 100%. Yeah, the risk pain will show how much contracts you can go for and the loss and the profit you can take using stop loss and take profit. Excellent tools. No time frame at all that is preferred. There is no good or bad time frame. Anyone who tells you that, they don't know what they're talking about. There is no better or worse time frame. Every time frame has the same principles applied to them, but the expected distance from the moment you get in a trade and your exit is shortened by smaller time frames and is expanded on by longer time frames. So if you have a daily time frame and you want to go short and you're sure that it's going to have at least 3 daily candles that are red, well, prepare for a mini heart attack with Bitcoin, because if your entry is short here, and you could be right, this thing is going to go up $2,000 up first, spend another 15 hours up there, then come crashing back down to your break-even point, at which point you'll consider, maybe it was a bad entry. Then you'll close it, it'll go up and you'll feel great, and then it'll just stop there, drop again, and finally go down to your intended target 3 candles later, 3 days in a row dump. But it's going to be like this. It's on lower time frames, it's going to look like this, although directionally you're correct. So you're going to spend time sitting underwater as a given. If you want this instant gratification, in and out, bam, made my bread for the day, your pyramids, baseline reclaims, retest, supported by momentum, and understanding that if we dumped, then we're likely going to pump on lower time frames, right? It doesn't really matter if the overall direction is down. You're still thinking, okay, there's still time. Then you're counter trading the whole market. Market goes down, you're buying. Market goes up, you're selling, based on these signals. So yeah, green stop. All right, your choice. ATR distance is the same. Meaning it goes up. Dragon skin. What do we know about dragon skin? Flip the chart. What do we know about dragon skin? what's the strategy for dragon skin? Is that once we have a reclaim, retest, first of all, that's a long. But second of all, if you don't want a long, you're automatically shorting this. You're automatically shorting this. Why? Because you know price is going to go into this thick dragon skin and get rejected. All right? It gets rejected, and judging by the ATR numbers, if 5 minutes is 32, there are about like 12 trades in here within these candles that are appropriate to execute on and take profit based on those values. Under no circumstance are you going in and holding this to a level. That's a completely different style of trading. And I have nothing to say about that. I believe people are risking a lot by doing so. If they're holding to some level, some resistance, and they don't know how to take profit on time, they're risking to lose it all, and then they'll be forced to try again and again. It is an endless cycle. Yeah, first attempt, dragon skin bounces. You know, early bird gets the worm. You come in there late, 3 attempts later, 3 bounces later, and you're longing the 4th bounce. It's like, I don't know what to say. Platoon, we have to apply a little bit of logic and say, nope. Missed my first bounce, 2nd, and it's getting weaker and weaker. Why the hell would I, why would I go for the 4th bounce when the last 2 were like weaker than the first? You know, there's something's happening there. Maybe it's worth investigating. Maybe it's worth looking into. You know what I mean? So we have to. I see the signals, but a lot of times when there's a piece missing, I walk away from it. I'm not interested unless I'm scalping. So look, stops are probably here, $200 range. That's about an hour short, right? just because, you know, I'm not ready to buy into it or go full short. Let's say it triggers and eats these stops. Okay. Well, then I have a whole consolidation up above here where price can go. And to me, if I can average it out to here on 1x or 2x, then I know based on this that we're probably going to come back here because this will be the support. So price will go up and come back down. I'll exit, no problem. And this is done by not even looking at what's going on there with equilibriums or anything like that. It's just looking at price, where the most heavily traded area was, and how the momentum is looking here, and understanding that nothing goes in a straight line. So don't be surprised if you look at this and it's not really playing to your tune here, because remember, the reason you're always underwater when you go into position, and that's how nature intended it to be, is because price needs to go up in order to go down. And I think you saw the correct setup, the correct chart, and the timing is a little off, and that takes a little bit of time to practice or be completely desynthesized. Have strength understanding that what you're doing is 100% right, but you can't really time the market. So you may need to exhibit some patience and wait a little longer than usual this time around, because you just jumped the gun a little early. But you're right. And this is what allows me to not really, like I said, it sounds crazy, but sometimes stops are not really, this is completely ridiculous to someone who's coming from traditional trading education, and because the first thing they're taught, and that's because everything is not financial advice. There's not a single guru who can tell you don't trade with stops. I'm telling you, the market loves your stops, and you're giving your money away by not realizing when analyzing. And these guys cannot recommend and tell you don't do it because it's risk management. Of course you need a stop. How can you trade without stops? They're necessary, but not always. You need to know when to use them. For example, that squeeze pattern right before the breakout, you may want to put a stop here or here, depending on which direction, right? As we squeeze, as we're getting to that final squeeze right here, you may find that a stop here is good because if you're wrong, you don't lose much. However, where would you put a stop in this whole range here if you were trading, and especially if you were holding? Every stop here got eaten eventually. Unless you took profit on time, every stop in here got eaten if you did not take profit based on ATR values. If you held it to some imaginary line or support that you drew, and you want to see price go there. See, the beauty about ATR is that the market doesn't care about you and your lines and your support and where traders think it is. But ATR value is just a number that, and MarketSpy shows you these plus signs where on the candle close would that be next time around. So you put your take profit point there, and whatever it is, you have to be content with that and say, look, I'm okay. I accept it. 90% I'll take profit there. The rest of the 10% is not in my hands. I will be responsible for my 90% of my position chunk. 10% let the market do what it wants to do. And sometimes you land on a huge profitable trade that just takes you to where you want to be. But you look back and you're like, damn, why did I close the 90%? I should have kept 10, the whole thing running. I could have made so much money. The thing is that 90% that you took and let 10 run is going to allow you to trade another day. While most of your other friends would be long gone, throwing up, just thinking about Bitcoin and price and everything, and like, they can't handle it. Be liquidated multiple times because you have to respect risk. Simple as that. So enough about that. Dragon skin. First attempt, pyramid, long it. Don't believe the hype that price is dumping or it's pumping. Baseline reclaim, pyramid in it, long it. May not always work out, but the probabilities are so high that you would be wrong not to. Stops, play around with it. I can't tell you. Stops are very difficult. They are not for everybody, and everyone has their own take on where the stop should be. And it's like, why are you arguing where the stop should be? For me, the longest wick and double the ATR value away from the entry, which doesn't make sense because you're going to take profit on one ATR, yet your stop is 2 ATRs below. It's a lot difficult for price to actually reach the 2 ATR point below your entry if we're talking about long. It is likely to hit your take profit on 1 ATR, but most educators and traders would tell you go for at least 2 ATR take profit and have a tight stop loss at 1 ATR below, so as to create the 2-to-1 risk to reward ratio. No, there's no risk to reward ratio. There's a profitable opportunity, that little space in volatility to extract value from. The ATR number is what you're aiming at because you're looking at the signal on that time frame. Higher time frame supports it, momentum supports it, baselines, equilibriums, the likelihood of price dumping is a okay, but your exit is within that ATR range and you don't modify, you don't, and your stop, here's the thing. A great trader once said that if you need a stop loss, it means you have no idea what you're doing and you're not sure about the trade. And so why are you even trading? Why are you even taking this trade if you need a stop? I don't remember when was the last time in the platoon that I told my traders, guys, here's the stop loss, just in case. I want you to all get fucked 1,000 points later, 2 ATR. If it doesn't play out, invalidation. You know, we never do this. However, we do get caught underwater every once in a while here and there. And I chalk it to discretion, you know. You feel like you didn't make the cut. You're not in line to receive that trade. You're losing. Your position is losing. 3 candles later, what are you still doing here? Click that, close that position. Or, if you're smart with your leverage, start averaging out. Hopefully you plan that ahead before entering the trade. And if you're absolutely not sure of the market, you need a stop loss. And a stop loss is giving the market permission to do whatever it wants with you. You're not in control after that. Fingers crossed, Hail Mary, I hope it plays out. If it doesn't, that guy in the beginning of our stream, you remember? Watch the beginning of the stream if you don't know what I'm talking about. That's that. By the way, our hypothetical stop is right here. Imagine yours is there too, and you're going short. Let's see if that stop will survive. I don't have it. I've accumulated a nice position now, but I don't have it. But I should have it there because it's the only place right now on a 5-minute time frame to put a stop loss. Anywhere here, all the stops got eaten. Anywhere here, all the stops got eaten. Anywhere down below, all the stops got eaten. Even if you were trading the ATR value, you should have waited just one more candle that if you had a stop loss there would have eaten you alive, and then still went and made the target. But yeah, this is something that you cannot say to your people live, to anyone, because on an off chance that they misinterpret and over leverage and don't have a stop loss and say, you know, things like, you didn't tell me to put a stop loss.
So I didn't put a stop loss.
You don't want that kind of responsibility, CR.
So, always put a stop loss. Just remember what I told you about stop losses. Be aware of it and do what you will with them. For some, it's helped greatly because of their decisions and how they execute trades, their style, what they're looking at. They need stop losses, you know. Other people, more conservative, not as risky. Oh, by the way, pyramids, if you're doing jackrabbits, you need stop losses. 100,000% you need stop losses on a jackrabbit. If you're doing a scalping jackrabbit, if the jackrabbit shows up on the pyramid and you're long, you need to quickly identify the nearest longest wick in the vicinity, and it cannot be an excuse wick. It has to be like an in-your-face wick, and those are visible by squinting your eyes a little bit. And if you can see the wick on your chart, then that's a real wick. If it merges together with the candle body, you're just making excuses and saying, oh, I see the wick. I placed a stop loss there, but it got eaten. No, it has to be a wick. And besides that, you look at the volume and you see, man, there's a lot of fat volume right here. Look at this volume. Look at that spike. If I put a stop loss right here, the chances of it hitting? Not really. So he goes 1 attempt, 2 attempt, 3 attempt, 4 attempt, and untouchable. Guess what? This is where the most volume was. How about this one over here? This candle. Boom. This candle right here. This wick right here. Stop loss. This one did not touch it. Look at that. It's the longest wicks that you see that just jump out, stand out. Those are the only logical places where you can put a stop loss on the jackrabbit. Sometimes you get a jackrabbit. I hate 5 minutes. It's too noisy right now. It's too noisy. So let's go over here. Sometimes you put a jackrabbit trade and you don't really see how clean the 15 is compared to 5. Look at 5. Look at 5. It's disgusting, man. How are you guys trading these lower time frames? I don't know. 15. Look at this. I mean, everything is clean, but like you're chasing $30. Look at the ATR value compared to 15. 15 is like $100. Yeah, now we're talking. Cleaner signals. Not as fast. But you know, it's more respected because it's a bigger time frame. But let's say you get a jackrabbit, which you don't have it, it's coming up. But you get a jackrabbit, right? And immediately you go long. Candle closes. Let's forget about these, for example. Let's forget about the here's a signal. Let's forget about the X2. Let's say you're unaware that there's a market change right here totally, and you're still long. You're like, yeah, you know what? It's working out. I want to be long. So you go long on this jackrabbit. 1 candle, 2 candles. Remember, it's an instant. All the other jackrabbits are instant reversal profit. This one, nothing. So you're like, I'm putting a stop loss right here. Or what's the longest wick in the vicinity? I don't mean like, let's go over here, because that's already like this territory belongs to all these candles over here. Here, 5 periods back. Okay, there's a candle right here. Put a stop loss right here. Boo-hoo, it didn't play out. I got stopped out. Yeah, on jackrabbits you need it. Check it out. And you're safe. Nothing really happened. What was the distance? Your entry? Stop loss 118. Not a scratch. It's okay. Jackrabbit, long entry, instant stop loss in the vicinity. Where? Jackrabbit itself or the next candle? You have to wait for the next candle close before you put a stop loss. There's a whole process. So jackrabbit, entry, wait for the candle close, then put a stop loss. You cannot get in, instantly put a stop loss, because what will happen is that you get in, price can go down, create a wick, bounce, close, and that wick is now the place where you put a stop loss. If you have something in the vicinity like these over here, put a stop loss right here anyways. Check it out. The stop would be right here. Boom. Instant profit, the next candle, close your trade. 90% out, let 10 run, wherever it wants to go. And it decided to go all the way up there. Beautiful. That's the power of the jackrabbit. Instant reversal. What about here? Look at the candle size. Scalpers, right? They're thinking, oh, that's a nice trend. But these candle sizes are what? About $100? 15-minute chart. It's still $100. Is this appropriate for to take profit $100 later? Yeah. Do jackrabbits give you that? Price closes, you go long, price goes up, 98, 100. First sign of resistance, 90% out, done. What else? Well, what about a stop? We're looking for a stop. Second candle closed, stop right here. This thing pumps, gives you 245. So 2.5x the ATR on the 15-minute chart. At the first sign of resistance or multiple resistances, you take 90% out. Throw a stop loss right here. On 10, and it instantly reverses. You took all the profit here. It instantly reverses, knocks out your 10%. You're like, boo-hoo, so what? Baseline reclaim, retest, next pyramid, rinse and repeat. How long did you have to wait between these two setups? These two trades took about 5 hours. I imagine if you're a scalper, you were probably monitoring this at the same time playing a game or watching a movie. 2 movies back to back, 2 hours each. Lord of the Rings, Star Wars rewatch, Star Trek, I don't know. Whatever floats your boat. Whatever's your favorite. By the way, recommendations are always welcome. Anything. I like to pass time when trading, and this is no different. Boom. So pyramids are really powerful plays, and they, you know, they can generate profits if you're risky. Go ahead, 50x. You know, that's what you want to do. But definitely use stop losses. Someone with like a 1x, 2x stop loss, you can survive a lot of volatility and be okay. You understand what's happening. You have a plan to average out. You have a plan to add. If you start winning, you can add to it and then get up to 50x, accelerate if things is, you know, very rare, but it happens. But if you're scalping and moving size with leverage, you need that stop in there, and you need to understand what you stand to lose. If the stop gets hit, that's good luck making that back, you know. If the stop gets hit, that's the worst of it. Above, oh, look at that. This is, what is this? 4-hour chart. Case study. Window needs to close. Pyramid absorbed all the sell pressure. Price bounced almost by 1,000 points. Now the window is closed. I would consider that this trade needs a little pause, but we'll see. That's a lot of dragon skin for one long candle. So wouldn't be surprised if we go all the way back up to here. Wouldn't be surprised one bit. But structurally, we're below all of this stuff here. But like I said, go back to the beginning of the stream. The idea is that we'll range here, but definitely up. Definitely up. It's not over yet. And then down again. Weekend. Now, taking profit was necessary here. Okay. Could have left a runner actually, but this was a very nice, profitable trade. Very confident, very powerful. But it was an EQ3, and this could have reversed easily from here. It did not. We had to push through that, and that was highly suspicious, but it brought us to where we are now. And so just looking back at this, it was a trend reversal right here. And it's going to take a while before this changes. gonna take a while before that actually changes. Even if we have to come back down, close the gap. Oh man, it's gonna take. We're sideways chop solidating / trending. That's going to be the case for a little while. You know? For sure. Okay. Ladies and gentlemen, it's a 3 hours, 4 hour stream. I feel bad for people who are not able to. I encourage you. Notification bell. Subscriptions, likes. Please. And yeah, just be here for the streams. We'll try to do more stuff together often, and you know, kind of sucks when you're coming back to it later. I know not everyone good. I need to find a good time for everyone to be a part of these streams, because a lot of the times I don't know where everyone is, and pretty much impossible to. Other people do it somehow, you know. Other people do it. Maybe evening time. You different vibes in the evening time. Your time, New York time, you know, Eastern time, and yeah, maybe we'll look into that. Do it like when everyone's just about to go to sleep, so you like put all this in your head and go to bed with it and just kind of internalize it. Wake up. And then become the one. See everything clearly and say, I get it now. You just wanted me to. I see. Right? The setup is right there. It's looking at me the whole time. All I have to do is execute it. Initialized. ATR. Took profit. No emotion. Robotic. Went back to sleep. LA all day. Nice. Okay, well, welcome Crypto Multiplier. This is yeah. We're gonna do this more often. I love Los Angeles, man. Be well out there, my friends. Be well out there. It's coronavirus, man. I'm telling you, we need to. Summer's. You guys realize we're at the end of the summer. The cycle, recycle, it's almost over. That's it. There's no more summer, man. It's almost August. It's crazy. It's crazy. Unbelievable. Yeah, I'm just getting old. I don't know. It just flew by. You know? This time it was different. This summer felt super short. Super short. Get it? We've been dumping up until recently. It wasn't looking good for most investors. 51. Life begins at 68. It's the fib, the golden pocket Fibonacci number. Something to look forward to. I don't care. We'll still boogie when we're 70. Hey, if you guys are still here trading, like we'll all be like Peter Brandt. You'll look back and be like, damn, those were the days. We'll be like passing charts telepathically to one another, you know, like just think of Radosh and boom, his bear chart shows up holographically in front of you, you know? Put your specs on, click a button, it's like, Sykes is thinking it's time to long. And you're like, maybe. You know, MarketSpy chart right in front of you. Wow. And at that time, we'll be out on Twitter because we'll be bored, nothing to do. Loaded because we'll look back and be like, you know, we never used leverage, and that's why we're still here. And we'll just tweet chart setups. Start calling bottoms and tops out of boredom, you know? Watching the world burn. I think it's going up. Legendary crypto trader Maros says it's about to go up. And everyone's like, whoa. He called the last top, which was the 5th time that it happened. And he called it. And then, yeah, you know, imagine that legendary status. I'll boogie on the beaches every day. Oh my God! Don't touch BGs ever again, CR. Don't do it.
I'm warning you, CR, don't do it. Even I, as a robot, could not appreciate you butchering beaches.
Oh my God, gotta stop it.
Get the fuck out of here with that nonsense. You don't know how to sing for shit.
All right, demons all over the place. Now it's late night, full moon. We gotta wrap it up, guys. What is this? This trade is what? Minus? It's okay. It's okay. We'll see what happens tomorrow. Like I said, let's let it cook up. Let it set up a little bit. And it was a good day. We'll see what happens tomorrow, right? Stay frosty, my friends. Too many games lately. Stay frosty. There's this one game that I'm playing. You know, it says stay frosty. But it's true. It's true. Let's stay frosty in the markets. Ladies and gentlemen, boys and girls, people and, you know, I don't know, whoever else is here. Tonto, Demon, haters, little minions. Thank you for staying and watching. What are you calling little minions? Okay. We'll talk. We'll talk. Just give me a moment. Can I end the stream? I'll be waiting right here. Thank you for watching, guys, and have a good night. Next setup is coming up. A couple of days. I promise you, we're gonna have something. I don't see it. I see the flag. You know what's putting me off? Even though we looked at everything, it's this. The distance from the flag to here has been made. We have a dragon skin, and I think it's a long, and I think we'll run that area there. Unfortunately. So for those of us who want to buy lower, tomorrow may not be the ideal time for it. I don't think we'll get that opportunity, but when it presents itself, I'll let you know. See you in Discord, and have a great day. out there. Platoon. Cheers.